Yesterday I cleared 50 G's, did it half asleep in some wrinkled tees. Then I checked my text, 5 friends in debt, talking like I owe them for the life I met. I used to chase hope, now I chase the pump. They post fake wins, I just post the jump. Told my mom I'm barely hanging on, but I bought a new whip just to prove them wrong. You can't afford to live like this. Bounced your rent for a meme coin hit. You can't pretend your trade's all hit, but you do, don't you? I made more last month than your whole damn crew. Still act broke so they never asked to. Post one loss, they swarm like flies. But where were you when I 5x twice? They play scared, I play God. Still swinging while their gains flatline and nod. They Google dreams, I wire them in cash. Laughing while their 5-year plans collapse. You can't afford to live like this. Bounced your rent for a meme coin hit. You can't pretend your trade's all hit, but you do, oh you do, don't you? You can't afford to live like this. Bounced your rent for a meme coin hit. You can't be dumb enough to dream so big. Yeah we can, yeah we can. You can't afford to live like this. Bounced your rent for a meme coin hit. You can't pretend your trade's all hit, but you do, oh you do, don't you? You can't afford to live like this. Yeah we can, yeah we can. You can't be dumb enough to dream so big. Yeah we can, yeah we can.
Oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where it's the day after, folks. It is the day after a record-breaking pump in the overall stock market, where the bulls went on parade, the bears were getting squeezed, and we notched in some truly historic levels. Obviously, I hope you got yours, and if you didn't, I hope you're ready to get it today. We are obviously starting a little bit early because in a mere 9 minutes, we're going to be getting an inflation report. The CPI, the Consumer Price Index report, is going to be coming out. And in the short term, this is obviously going to be the data drop that decides, is the party still on? Are the bulls still raging with their green neon lights? Or is this going to be a little bit more of a brutal fake out? Now, I do want to make something very, very clear. From this point, in terms of the way we talk about like high probability pathways, if you look at how the market has performed, and unfortunately we don't have that many data points after big rallies such as this, like I said, not the most data points, but it's a little suspect to say the least, because there are many points in history where we have bear market rallies, like big rallies like this, that we still end up going lower. And then there's other times, obviously, that actually represents the low and we pump. So my point in bringing that up is don't be completely sold and committed to one side or the other. Right here, yes, I will admit it. It does look like the bulls are in some considerable control right now. But if you look at the overall option chain, it's still put dominated. I want to be clear. Today and tomorrow, and actually all the way up until the 16th, is now call dominated. That's a big structural shift in the market. But by the time you get to the April monthly, it goes back to being put dominated. And then if you look at the following monthly expirations, they're all still put dominated. So the point that I'm trying to bring up is, yes, there's a lot of short-term enthusiasm, and that's what you need to get that longer-term enthusiasm. Like if we were to turn and actually start to get that V-shaped recovery, this is what it would look like. But sometimes we get this setup and it doesn't actually become that recovery. So all recoveries start like this, but not every setup like this actually leads to a recovery. That whole thing of like every square is a rectangle, but not every rectangle is a square. We're kind of in one of those weird geometry type of a situation. So I just want to kind of get that out there right now that yes, My personal bias in the short term is obviously favoring the bulls just because we broke previous highs. We got the upside gap fill. There's another upside gap fill. So there are things to be excited about, but I just want to remind everyone day in and day out, you can never be 100% committed to either side because in any situation, you never know what's going to be said. The announcements, data drops, updates from the government. This game changes so incredibly quickly. So you almost have to be humble enough to realize that we don't know what's going down. And there is that a certain non-0% chance that you're wrong. So with that, I want to just, the way when things were going down and people were panicking and they had those emotions, and I had to remind everyone, hey, this is just how markets work. Calm, cool, collected. It's the exact same thing on the opposite side of where you see this like over enthusiasm and people get bummed out when it doesn't necessarily go their way. And remember, the longer you go in the market, you're going to eventually find those instances where you're just going to be eating some humble pie and you are on the wrong side of it. So I want to be clear. I myself am looking for a V-shaped recovery. Ever since the start of March, I was basically saying, hey, I think that there's going to be a dip and the dip's somewhere to be bought between late March, early April. Apparently I was off by a week, but I am looking for a bullish V-shaped, like monster of recovery in this month, April. But with that being said, remember, nothing is guaranteed here. That's what I think the highest probability pathway is, but that doesn't, just because it's the highest probability, doesn't mean it's necessarily going to hit. So we got to day in and day out pay attention to the news, pay attention to the options flow, pay attention to what big money's doing. And ideally, as the little guppy fish that we are, we can hop on the trend of the big whales and make a couple tendies. So that's the plan. I just want to give everyone a good foundation for the day. Obviously, in a couple minutes, we're going to be getting that drop. I hope we're going to be able to listen to our boy Rick Santelli. Actually, let me see if I could get that ready. Our boy Rick, it's always going to make the days better. So Rick should be talking. We already have some various members of not only the Fed, but also of the administration talking today. So we're going to break that down. I'm going to give you any of the recent updates related to the trade war, specifically what's going on with China. We have a little bit of political updates of what's going on with the tax bill, a little bit of political updates related to Russia. And then obviously we have to talk a bit about earnings season, which is officially kind of underway now, but really tomorrow's the exciting day when we hear from JP Morgan, Wells Fargo, BlackRock, I believe is reporting tomorrow. So really, we are underway with the next round of earnings season. Really, I mean, you could kind of count it as yesterday, I guess, with Delta, but I would personally say it's going to get rocking tomorrow. So I appreciate you guys for joining me so early today. I hope you were having glorious dreams of gold pots and rainbows and tendies and making a shitload of money. And I hopefully that dream becomes legit reality today. So with all that being said, let's switch this up a little bit. I want to show you how things are going. Dow futures dropped 500 points with stocks set to give back some of the historic turnaround. Well, that's what happens when you rip like such an ungodly amount. And right now, it's not that much. We're basically at the value we were at. We saw this at literally the start of Power Hour yesterday. So Power Hour was truly a Power Hour where we got this pump, and now we're just giving back a bit to be in the middle of Power Hour. So I'm seeing a lot of lamestream media report this as like, oh my God, we're already falling again. Well, what do you think happens when you run 10.5%, when you run 12%? Yeah, I think there's going to be a little bit of mean reversion, a little bit of profit taking, a little bit of things like just cooling off because that's literally a record-breaking run. And then yet lamestream media is still of the mindset of already giving it back. Like, how could they? Like, man, you can't make everyone happy. You cannot make everyone happy. So, obviously, yesterday, historic day, and we're going to circle back to that, but there are a couple things I want to chit-chat about. First, Fed leans against inflation and away from preemptive rate cuts. So we know that Trump very much wants a rate cut, and we know that the Fed, their models are telling them to not give us a rate cut. U.S. inflation just shows some relief ahead of tariff impact. So a lot of it is going to be, really has to do with inflation, and that's what we're about to get. Just so you know, the CPI is expected to be 2.5% year over year and 0.1% month over month. And if you're looking core, we're looking at 0.3. We're also getting initial jobless claims. So those are the numbers, the line in the sand. And the Fed's feeling some pressure because apparently Trump was just asking the Supreme Court to let him fire top agency officials. And a lot of people are thinking that this is directly pointed at Jerome Powell. But obviously, we're going to be circling back to that because I want to see how the market reacts here. Let's get ready. We have about 15 seconds to go. As of right now, the SPY is just below 533. Cast your vote. Cast your vote. I want to know what you guys are thinking. Let's see if they're bringing up our boy Rick. They are on commercial break. Let me get the audio going. Cast your vote. We are right below 533, and we have 1 minute. It is 8:29, so you have 60 seconds to cast your vote. I have faith in you that you guys will be able to figure out how to do it. You think we're about to pop or you think we're about to drop? And then obviously as it comes out, we're going to listen to them. Then I want to go back to apparently it's being reported that Trump is trying to get Jerome Powell fired or trying to get the power that he's going to be able to fire him. So we'll see how that's going to go. I want to talk about that, give you a recap of yesterday, talk about what to pay attention to today. And then from there, we're going to be doing a little bit of degenerate trading. Dip and rip, red. Man, we have some negative Nancy's in here today. Small drop, then God candle. El Toro Grande. I don't know if that's a direction, but I'll take it. We'll see. All right, we are 10 seconds out. 10 seconds out. 10 seconds out. They're even playing us the weird music. Let's see. Gap
We're
up.
live in Seattle, and we're just seconds away now from March CPI data and weekly jobless claims. Take a look at the futures because we are in the red this morning after powering back yesterday.
Nice pop. We went up $5 on that. We went from 533 to 538, and now we're already giving it back. What in the world?
Rick, the numbers, sir.
Yes, these are
really good initial reaction, and then right away giving back.
Under -1/10 on headline.
-1/10.
-1/10. We're expecting the
cool.
exact opposite.
We got a cool one. Low inflation. Market's liking it.
Well,
today might be another exciting day, folks.
In May of 2020 to
it
find
might be another
number.
exciting day.
April of 2020, the heavy COVID-affected months of the calendar. If we take food and energy out, still coming in on the under. Up 110.
Still on the under.
We're expecting triple that number. Up 110.
Cool inflation.
Well,
that's what you want to hear.
Where we were in June of last year. To find a lower number would be 0 in January of 21. These are definitely low numbers. Now, let's look at year-over-year perspective, shall we? Up 2.4. We're expecting 2.6. 2.4 would
we're definitely coming in cool. If you're a bull, this is what you want to hear.
Of 21 to find a lower number. Now let's go year over year. X food and energy expecting 3 comes in light 2.8.
Everything's coming in light. Everything's coming in light.
Would be lowest since March of 21. These are really low numbers. Now let's look at initial
Rick,
continuing
it's a barn
claims,
burner.
shall we? On the
another barn burner from
we're looking
Rick
for a number that would be roughly in the 224 camp. Comes in at 223, very close to expectations. And if we look at the
we went from 533 all the way up to 539. A quick $6 pump. It was faded, and we're trying to go up. We're up about $3 right now.
893,000 is last month.
Look at that.
And the new number,
rip,
1,850,000. 1,850,000. That really is a nice drop. And if we want to comp, the last time we were at that level, well, it would be the
and we still have some room to go to take out yesterday's high.
When we were under 1.84. So that would be your comp. You could see yields haven't moved under in a dramatic way, but I will say there's a bit of irony here considering all the tariff stories on inflation. To see these numbers coming in light for March, well, it's somewhat enlightening. Now, let's go to Steve Leisman for some thoughts. As
all right, give it to us, Steve. How much do you like it?
Steve?
Yeah, Rick, thanks. I'm looking at here this core goods number.
I want to see us back up at 546, another $10. That's what we were seeing in post-market yesterday.
That you saw in prior months because of front running on tariffs. That came back and was well behaved. If you look at the commodities, X food and energy core goods,
Bitcoin, a little bit of a pop,
downward move. Nice help on
yields coming down.
Was down 0.8%.
Dollar dropping.
It's up.
Dollar dropping.
And
yields down.
You went the other way on the owner's equivalent rent,
USD,
0.4.
JPY.
Not as bad as it had been. You had some pop up in food prices.
USD, JPY dropping a bit there.
And you got an awful lot of help from energy this time around. The key here is
VIX hanging out at 35.
Well, this may be the calm before the storm, a lot like the employment numbers. Do you have higher inflation numbers coming through because
little
of,
pop
of
there
some
in
of the tariffs
Tesla,
that are
little
out
pop
there.
in
Real quickly on the
MicroStrategy,
tariffs,
little pop in
the
Nvidia.
market
Everything's
seems
getting
to
a
think it
little
got
bit of a
lot
pop
relief,
there.
and maybe it did. Maybe there's a change in stance of President Trump. But I'm reading a lot of the dismal scientists that say, you know what? There might have been a lot less there than you think. Average tariffs in the country are still very high, even after that relief, much higher than 10%. Wells Fargo just sent me a note. They say the average tariff in America is 27%. I'm seeing numbers 23, 22, and they're still predicting negative numbers on GDP and surges in inflation from
way?
the existing
Little
tariffs,
pop,
unless
kinda
they go
going
away,
flat.
Andrew, from negotiation. To you, Andrew.
Thank you, Steve. We got a guy who knows a lot about
Since the
consumer.
announcement, we are up
in,
0.5%.
We
We did pump all the way up to 1%
An exclusive interview
at
with Amazon
first.
CEO Andy Jassy out with his annual letter today, and there's so much to talk to you about. Couldn't be more thrilled to talk to you.
Who's this guy?
Especially right now.
Amazon CEO
We have
Andy
the CPI,
Jassy on
number.
Trump's
You don't
tariffs
focus
and
so much
impact on the consumer.
On these, I
This
mean, how
is
often
Amazon
do you look at that number
CEO.
and think this is going to change the direction of my business?
Not that often.
Not that often, but I imagine you do when it comes to tariffs.
We look at all the things that could impact consumers and customers.
So what is going on right now in terms of the way you're thinking about the tariff position? Obviously, the China piece of it is still on, and a huge portion of your sellers and other and manufacturers that are selling through Amazon manufactured in China.
Well, it's hard to know what's really going to happen. You know, there's
Dude, they're all going to
there's a
come to
lot
the
of
negotiation
flux right
table.
now, and you know, what we're going to spend time on, where we spend all our cycles trying to figure out how we have the right customer experience. So we know customers care a ton about selection. We're going to try and do everything we can to keep prices as low as possible for customers, and we're going to ship things as quickly as possible as we can for our customers, and that's what we're going to spend our time focused on.
There have been some reports that you've already started to cut back, though, in terms of buying certain product from China. Is that true?
Well, what I would tell you is whenever you have any threat of any kind of discontinuity,
Little
as a
pop
team,
there
you have
in
to think
options.
about what are the things you can do to help customers. And so we're doing everything we can to try
Options
and keep
started to pick up at
prices, the way they've been
4:45
for
this morning.
customers
Then
as
we
low as
dropped, and then
possible.
on that
And,
announcement,
you know, so we'll
a
do
little bit of a
things
pop.
like we've done some strategic forward
Lots of
inventory
puts being
buys to
closed
be able to
out.
get,
Put
as
deltas
many items as
ripping.
makes sense for customers at
That's
lower
bullish.
prices.
No one's really
You know,
touching
there
calls,
are some
though.
cases where we have deals we were negotiated that weren't done, where we'll renegotiate terms to make it easier for customers to have lower prices. So we're going to do everything we can to keep prices as low as
Are
possible.
you seeing, by the way, any pull forward in terms of folks saying,
now
I need
we're
to
giving
buy
it all back.
my
We're at
son
right where
just
we
yesterday,
started.
who's
So
been
the
desperate for a
pop
new laptop,
is now
said,
back to
"Dad,
zero,
maybe we gotta buy the
neutral.
laptop now because it could cost a lot more later."
You have a smart son. How old is he?
14.
Oh my gosh. You know, I think again, it's such little data at this point since the first set of tariffs came out, and then yesterday there was a pause. But we have seen, we see people have not stopped buying, and in certain categories we do see a little bit of people buying ahead. But it's hard to know if it's just an anomaly in the data because it's just a few days, or how long it's going to last.
Jobs came
we're
in
gonna do, as I
perfectly
said,
at
everything we
expectations.
possibly can to keep
223
prices low for
versus
customers.
223.
Who
There
is
is a
gonna
30-year
eat
bond auction
the
at 1
cost,
p.m.
though? Because I
today.
think that's one of the big questions. How much can get passed on to the customer? How strong do you think the American consumer is right now?
What are we
and
doing
how
here?
much of it gets eaten by Amazon? How much gets eaten effectively
What are we doing
by
here?
potentially a third-party seller?
I think we'll have to see how it all plays out. But if you made me guess, I'm guessing that that sellers will pass that cost on
Fully.
And, I think they'll try, and I understand why. I mean, depending on which country you're in, you don't have 50% extra margin that you can play with. So I think they'll try and pass
All right,
the
this is
cost
getting
on.
a little bit boring. I think he's not saying anything new. So a little bit of drama this morning. President Trump requests Supreme Court allow him to fire Jerome Powell from Federal Reserve. Now, to be clear, he didn't really ask specifically for Jerome Powell. He just said, hey, does he have the capability to do this? Hey, someone wants to say hi. Say hi. You ready for another big day? Not ready for another big day in the market? You haven't saying hi to everyone in a while. Anyway, President Donald Trump has asked the U.S. Supreme Court to allow him to immediately fire top officials at 2 independent agencies. The case is testing a 90-year-old Supreme Court ruling that lets Congress shield high-ranking officials from being fired by the president. The outcome would determine whether Trump has the power to fire Federal Reserve Chair Jerome Powell and could also impact the job security of other agency officials. So to be clear, he didn't say, I want to specifically. It might actually end up being Powell. Like, we don't know. So I just want to be clear. Like, he's just saying, do I have the power to do this? And if he does, then he could fire Jerome Powell, but it might be targeted at someone else. So what do you think about that? Do you want to be the Fed chair? Do you have anything to say to everyone? Anything you want to say? No? You seem tired. You tired? You trying to take a nap? I think she's trying to take a nap, folks. Trying to take a nap. All right. She'll probably hang out with us today. You gonna hang out? No. Maybe she has better things on her mind. I don't know what her schedule is today. She's a busy gal. So that's a little bit of the drama. Obviously, we know there's been quite a bit of chirping from the president saying, hey, Powell, cut it, cut it, cut it, cut it. And then Powell is always trying to be the adult in the room. And whenever he does any of these press conferences, he's like, hey, I don't talk about politics or anything right here. We're sticking to our jobs. We're sticking to our models. And right now it is saying we still have a very serious piece of inflation to consider before we start cutting rates. It has happened historically that the Fed cut rates too early. And you could say for one reason or another, it might have been because of political pressure. And then guess what happened? Inflation ripped right back up. And it was even more difficult to handle in that situation. So that happened decades ago. And they're very much attempting to not allow that to happen this time around. But that's just some of the drama this morning. And I think just what's more funny is Trump when he gets his hands on his phone and he's just popping off on True Social and on X. So this is from Trump this morning, specifically 12:45 a.m. This guy does not sleep. He has more energy than I do. And I am many decades younger. What a day. More great days coming. So yesterday he hit us with a Make America Great Again. And then at 9:37, 7 minutes into the trading day, he said, this is a great time to buy. And then he announced that we're getting the 90-day pause and the market ripped. And now he's hitting us this morning with, hey, just more great days coming. Like just we got some green on the horizon, if you will. Obviously, the major news of the day yesterday was exactly this. Trump temporarily drops tariffs to 10% for most countries, hits China harder with a 125% tariff. So this was the big news that caused us to have a historic rally yesterday. Based on the lack of respect that China has shown to the world's markets, I hereby raising the tariff charge to China by the U.S. To 125%, effective immediately. At some point, hopefully in the near future, China will realize that the days of ripping off the U.S. and other countries is no longer sustainable or acceptable. And then really, this was the exciting one. I have authorized a 90-day pause and substantially lowered reciprocal tariff during this period of 10%, also effective immediately. Thank you for your attention in this matter. I also just every other line is just such a comedic bit. I love it. But anyway, that's the story. Does anyone else find it interesting how the two sides of the political aisle responded to this? Like it was so diametrically opposed. So you have on one side the people who support Trump or who support this effort or just GOP, whether they're conservative economically, hardcore MAGA. They're like, man, this is the art of the deal. This is what you get when you have a businessman in office. He's crushing it. He's slinging it. He knows how to negotiate. Look at them apples. And then on the exact same piece of news, exact same event as in the announcement and the following market rally. If you are left-leaning, maybe just don't agree with these tariffs, maybe you're just hardcore liberal, maybe you have Trump derangement syndrome, but I'm saying like that side of it, they're like, knew it, Trump caved, what a pussy. He said he would never cave and he caved. Like, man, like you shouldn't be making like these empty threats. That's not good. And it's the exact same thing. I find it, the current crowd psychology going on, like the current state of psychology in the US and globally of just like how far the delta is between everyone, how big this mental disparity is, where we could all look at the exact same event and depending on what side you're on, it is wildly different. Like literally on one side, they're like, this is why he is the best negotiator and businessman of the modern era. And then the other side is saying, we knew he was weak. We knew he was going to cave, and he caved. And now this is where we're at. And there's going to be lasting repercussions, and none of us are ready for it. Like, it's just, I guess that's just me. Maybe some of you guys do it. Maybe some of you guys don't. I don't know. But I was thinking a lot about that because when I'm doom scrolling on X, it's just like I feel like I'm getting ping pong back and forth. And they're like, he only did it because he knew he messed up the bond market and this wasn't his goal. And then the other people are like, dude, this is like a 5D chess move. And he basically like bodied China out of the ice rink. It's wild to see the reactions. If you ask me, the truth is probably somewhere in the middle. I do believe that Trump is a good negotiator, whether you like him or not. I think he has higher quality negotiation skills. I think the administration had somewhat of a plan. I don't think it was necessarily such an extreme 5D chess move that people were kind of predicting. I think there were a couple things that they anticipated, a couple things that they didn't. Some of it broke in their favor, some of it didn't. For example, I think they very, very much knew that they could get the situation to be the world against China and China against the world. So basically really like lowering their stance in the global pecking order. I don't think they necessarily anticipated how much stress there would be in the world of fixed income, specifically the credit market and very specifically the repo market. So like I said, I think the truth is somewhere in the middle. I think some of this was calculated. I do. And then I think some of this broke a little bit in their favor and some of it did not break so much in their favor. So I'm most of the time on this stuff, I'm going to be middle of the road. I find it very hard to believe that we have a like marionette master in control, and then I also find it hard to believe that we have someone who's like completely incompetent and is just kind of like bumbling their way through. Like most of the things in life, I do believe like we're going to be roughly in the middle, and then people just get painted with their like extremes and personal biases. And I think in the world of trading, I even have to remind myself day over day that when you start to feel like that sure and that confident, hey, maybe if you want to do that in life, that's great. But when it comes to trading, you like day over day, trade over trade, moment over moment, you have to remind yourself that there's a good percentage chance you're wrong. And you have to ask yourself what's going to happen if you're wrong. And I think that's actually an aspect of why trading is so difficult, because in other aspects of life, whether you find your own like social tribe or something like that, people like it when you kind of dig your heels in and like just don't relent and don't see the other side. Like that's just how polarized the world is. And in trading, you have to have like that unique ability to be like, okay, I think this is right, but I also know there's a good percentage chance, like a 50% chance that you're wrong. And you have to exactly know your exit plan, which means you have to be humble enough to say, yeah, dude, I was just completely wrong. So it's just like, it's so opposite, like active trading relative to like really the social state of the world. But I saw that and all the responses, and I just thought it was absolutely wild. Trump transforms tariff war into high stakes showdown with China. It's not going to be that much of high stakes when it's the entire world versus China. That's the current setup. And obviously the administration, whether they intentionally did it or maybe it was luck or like I said, somewhere in the middle, it worked out clearly in the US's favor. And it's kind of maybe not even in the favor. It's kind of just like specifically disadvantageous for China, to the point that China leaders to meet on stimulus after Trump's tariff shock. Basically, their currency is tilted. The yuan, it's going to get tilted. And there's a lot of people predicting a 10, 20, maybe even a 30% drop in the yuan currency from this whole ordeal. And everyone's looking for the US dollar to gain relative strength against it, which obviously has big implications on trade, as you can imagine. But right now, China basically stepped into it.
The entire playbook has changed. The PBOC set the official fixing beyond 720 for the first time in 1.5 years' time, immediately after Trump threatened for another 50% earlier this week. So currently, I don't think the absolute currency stability remains to be a priority. And that used to be a key hurdle preventing China from easing further from here. So the playbook has changed in a way that the focus is really going back to domestic market, stimulating domestic market through fiscal monetary policy, and therefore letting go the CNY will allow them to regain monetary policy as
CNY
well as
is
independence
the
from
symbol
the Fed,
for their
and
currency.
allow the PBOC to start easing much more aggressively from here.
You've changed your expectation as well. So what are you now seeing for the CNY?
So instead of defending the line of 735, we expect the PBOC to allow.
let me just interject there to add a little bit of clarity. So she's talking about the CNY, which is the symbol for the yuan, right there because of this trade war. On a relative basis, their currency, the yuan, was dropping. And what had happened was the Chinese government, the CCP, wanted to protect it. They didn't want it to get so devalued. So they were sitting on roughly $800 billion worth of U.S. treasuries. They said, okay, let's sell these treasuries. When you sell the treasuries, you get U.S. dollars back. They then converted the U.S. dollars to yuan, buying up their own currency to support it. The actual government of China was the natural buyer, trying to put in a bottom there. And obviously, it also had the secondary effect of when you are in kind of an illiquid circumstance in fixed income. Well, when you're illiquid and then you have a big seller of treasuries that was coming first to get the US dollars, that's what was putting a ton of stress on really the fixed income market. And as you're selling it, obviously the prices of bonds are going down, and that's why yields were ripping. So literally yesterday morning, when we were talking about the craziness in the fixed income market, yields were ripping, bonds were dropping. That was all a impact of the fact that the CCP was dropping. The Chinese government was selling as many treasuries as they could to get their hands on dollars to then buy the yuan with those dollars to protect their own currency. But now that was yesterday morning, and then basically now after yesterday afternoon, they're in a new circumstance where they kind of are going to be forced to accept it dropping a little bit more, and as you're about to hear, roughly 10 to 20, maybe in an extreme case, 30%.
A measured depreciation of the CNY against the dollar by about 5 to 10% before the end of this year. And dollar is more important than the basket in our view. So this would have a number of benefits. Aside from regaining monetary policy flexibility, they would also allow the exporters to partly mitigate the pressure from the loss of external demand, because the bulk of their export incomes are tied to dollar, but the cost base are tied to CNY. So that would partly support their profitability by devaluing the CNY a little bit. And it's
to clarify that it's a very nuanced point, but it is an important point. The exports are going to be valued in dollars, but when they're actually doing business, it's going to be in the yuan. So the fact that the yuan is losing value compared to the US dollars, it's going to offer a little bit of relief on the exports just because of that differential in the currency when you do the currency switch. So just to clarify a little bit there, and it does ease the pain a little bit of the 125% tariff.
Also helpful to partly alleviate China's deflation pressure at home as well. So we are now looking for dollar CNY gradually edging higher to 755 by the end of the second quarter and 775 by the end of this year.
That sort of depreciation level, I could be wrong here, but I think that's sort of similar to what we saw in the first trade war or the first term that Trump had in office. This time around, though, the relationship is a lot more hostile between Washington and Beijing. So you don't see that we could see, I mean, some are saying we see the yuan weaken 30% against the dollar.
Oh, brother.
This time, we believe that the reason why they weaken the CNY, it's not to offset the implication from tariff. Tariff at today's level, 125%, is impossible to be offset by any form of currency depreciation. So that's a different playbook compared with 2018 to 19. And also during that time, China was looking for demand elsewhere outside of the US to basically sell more to the rest of the world. But today, even after this pause for 90 days announced by Trump overnight, he is still keeping the minimum of 10% of tariff. So that means that incrementally, the U.S. demand will still be more serviced by domestic supply rather than supply in the rest of the world. So currently, no one have excess demand in the rest of the world, and everyone have a little bit of excess supply. So it's the reason is really not to offset the tariff impact, but to regain much more monetary policy flexibility.
So what does it mean for rates? I mean, if this opens up more possibilities for the PBOC to move on other levers, what do we be expecting?
Public Bank of China.
So we believe the PBOC could start easing again and more aggressively, including both rate cut, cheaper cut. We even see possibility for them to be cutting as much as 20-30 basis points this month in the OMO rate. And for the full year, it's possible to see 40 to 60 basis points of cut, which would be more than 30 basis points last year. So although people would argue that monetary policy is less useful, but it would facilitate smooth execution of of fiscal policy as well. We have already seen the government front-loading a lot of the bond issuance so far this year. For example, CGB net issuance more than tripled in the first quarter of this year. So clearly looking to accelerate the pace of fiscal spending, and a easier monetary policy could allow cheaper funding from the Ministry of Finance and smooth bond issuance, and possibly a further step up of fiscal deficit later this year.
All right, so that's obviously getting really into the weeds, and it honestly is important. So I want to kind of, I'm happy. Let me get out of this. Let me make this a little bit bigger. Anyway, the TLDR is China leaders to meet on stimulus after Trump's tariff shock. They know they are playing on their heels right now, and it's going to be interesting to see how they respond. It does seem, once again, none of this is ever guaranteed, but we are attempting to just talk about the highest probability pathways. It does seem as if the highest probability pathway, and don't take it from me, take it from basically all the talking heads on media who know far more about this situation than I do, that China in the short term is going to basically try to stop the hemorrhaging of a gunshot wound with a Band-Aid. And when they realize that they can't do that, they're going to have to basically come to Trump and negotiate with him, because the longer it goes on, obviously there's going to just be more pain involved, as you could obviously imagine. So this is a particular narrative that we're going to have to keep paying attention to, because if there were an event that we find out in the next week or so that China sent delegate members, they came and they negotiated and we have a deal and that's announced, look for the market to just rocket again. This is like obviously we're talking about this, hey, there's a 90-day pause. People are going to join the queue and they're going to negotiate. And it sounds like within the next 3 months, basically from now to July, we're going to probably strike just deal. This is the one kind of situation though. This is what would Rick say? The fly in the ointment of the overall situation. So then if this one also breaks in the positive way, obviously it wouldn't be that much of a reach to see SPX back at 6,000. Obviously the sooner the better. But that's, like I said, the one fly in the ointment, but every other country is pretty much going this way. The European Union, I know not a country, but basically this is the only one that's a conglomerate, well, a mixture, while all the other ones are individual countries. But anyway, the EU to put countermeasures to the U.S. tariffs on hold for 90 days. The EU will pause the adoption of its retaliatory tariffs on the swath of U.S. goods for 90 days, according to the European Commission President, Ursula von der Leyen. What a name, Ursula. You never really hear the name Ursula anymore. It feels like that Disney movie, the one about the mermaid. What the hell is her name? The redheaded chick. I feel like that movie kind of ruined the name Ursula for everyone. But anyway, side point. EU members voted in favor of the package on Wednesday in response to the U.S. tariffs on steel and aluminum. So we got a lot of talk. The Little Mermaid. Folks, come on. How did you not know that? The Little Mermaid. Anyway, I do think Little Mermaid really kind of tanked the name Ursula. I don't think really many little girls after watching that movie, when they became women having their own kids, were like, cool, we're going to name our kid after the villain in that movie. You also don't hear the name Mufasa anymore. There's no more Ursulas, no more Mufasas. Seriously, when is the last time that we, Mufasa, Scar, what's Disney doing with these names, folks? Anyway, I'm going off the rails. Let's bring it back to the show. So I'm fully expecting, and we actually already got commentary from this, that we know Japan, South Korea, they're Vietnam, they're all Israel. They're all at the head of the queue saying, yeah, we want to talk. We want to figure this out. It's not maybe 90 days they figure it out. There's many countries are already eagerly trying to speak with the administration about getting their deal before this goes into effect. So, of course, there is a non-0% chance that 90 days later, maybe that we don't get deals. But I would say the higher probability pathway is that just slowly but surely we get a little bit more news of deal stuck with China. I think it's going to come out in dribs and drabs like that. Okay, deal struck with Japan, all good to go. Deal stuck with Vietnam, all good to go. I think it's going to be that kind of a news cycle where we don't get it all at once the way we've been doing now. Tariffs on, tariffs off, tariffs on, tariffs off. From here on out, I think it's going to be individual narratives related to just specifically how that trade is going. Once again, that's just a little bit of my personal conjecture. But this is from Kevin Hassett, the NEC director. He was on, I believe, CNBC, maybe Fox this morning. Anyway, he had an interview about how even before all this craziness, there were many countries coming forward saying, like, let's deal. And now with the 90-day pause, it's even easier.
I think that what's been going on all along is the president recognizes that in order to get the big change that we need for America's workers, like these are really fundamental changes that we're talking about, that we need to create enough pressure on our trading partners that things the American presidents have been asking for the last decades are actually offered at the table. I can say that I was on a call with the Swiss president yesterday with President Trump. We've got a whole system set up through Susie Wiles and the cabinet secretaries that we're starting to have a meeting today after lunch where we prioritize our allies and other countries and decide who or when is going to visit and when. But I can tell you that the amount of stuff that's coming to the table came up really a lot, long before the market movements this week. And so it was looking like that there had been enough action to get us to the point where we should really genuinely start negotiating. And if you go back and look, you can see the negotiation signals were out there already, even on that Monday where somebody made a fake tweet that suddenly said that I was saying something that ended up being kind of mostly true on Wednesday. And so anyway, I think that everything was
weird, brother.
In an orderly fashion.
That was weird.
No doubt that the Treasury market yesterday.
How super strange that exactly what was leaked became true 2 days later. That's weird. Oh, it's so. I bet that's just a coincidence. I bet that's just a massive coincidence that the exact same thing that was pitched as fake news on Monday became true on Wednesday. That's just probably. It's got me scratching my head, folks. I mean, I've been around the block a couple, 2-3 times, and just whenever you see a coincidence like that, like you think to yourself, oh, shucks, man, that's just so strange. And there's probably nothing going on there. It's not leaked information. It's not people making millions and billions of dollars on insider information. It's not that. It's just like, it's weird how honestly sometimes the world works out, that exactly the thing that's pitched and then is retracted ends up becoming true. And yeah, the world is full of coincidences.
I was saying something that ended up being kind of mostly true on Wednesday. And so anyway, I think that everything was moving forward in an orderly fashion. And there's no doubt that the Treasury market yesterday made it so that the decision that, it's about Kevin, time to move was made, I think, with perhaps a little more urgency, but it was going to happen at any moment anyway.
So Kevin popping off. Why does this not work for me? All right, whenever I go full video, I have to do that. I hate whatever the new Chrome thing is. But anyway, on again, off again, tariffs send Americans rushing to stock up. COVID memories of shortages, price increases, and supply chain shocks are motivating Americans to load up on vinegar, tires, and furniture. Well, that's kind of already old news at this point. I truly believe that it's not, I can't say it's over, but I could say, like, reading the tea leaves, I think this is just kind of now, we peaked the insanity and now we're just going to be coming off of it. And we're going to basically be looking for the next big thing to pay attention to in the market. Since we're here talking about like leaked information and lamestream media, folks, on the screen right now is my, argument, my piece of evidence to all of you why everyone should hate media. What we have with these media conglomerates where they're so politically biased one way or the other, it is disgusting. And I'm not saying, hey, it's fine on the right. Oh, no, it's fine on the left. No, it's disgusting that they both do it. But as you guys know, yesterday, percentage-wise, it was the 9th biggest gain in the S&P 500 ever. It was the 2nd biggest gain in the NASDAQ ever, percentage-wise. But in terms of point-wise, like actual pure dollars, it was the biggest gain in the S&P 500 and in the NASDAQ. And yet, here's the headline. Billionaires score best ever day as stocks soar on tariff pause. Now, you can't really come after them because that's technically true. But if we think about this logically, like let's just really deconstruct this. The fact that the market ripped the biggest ever, this is technically true. I'm not saying that this is inaccurate, but I'm saying it's quite the way to spin a story because you could say this about millionaires. You could say this about trillionaires. You could say this about thousandaires. You could say this about a person who has $10 in the stock market because by fucking definition, it is the best day ever. So I can't disagree with it. This is technically an accurate title, but it's once again, there's like a little side punch in there, like a little rabbit punch in there to try to get the world for whatever reason to just hate billionaires. Like the billionaires scored the best. Well, yeah, because when we all have the same percentage gain, when you look at the dollar value, who do you think's going to get the same fucking money? If the market goes up 10% and you have $1,000 in there, cool, you get 10%. If you have $1 billion in there, you're still getting the 10%. So it's the same percent. Like it's so silly, as if like only billionaires won in this. No, anyone in the stock market had. You could have anywhere from a dollar and you would have still gotten the same percentage all the way up to billions and billions and billions. The fact that the media is so willing to, because they know it gets clicks, like that's why you do it. You don't do it. I highly doubt these writers even really care about billionaires themselves. They just know that this gets clicks because it has such a negative emotional response. And there's been countless studies that have shown that's what gets people to click. Billionaire score better, like down with the billionaires, down with the billionaires. It's like, dude, everyone got the same percentage return yesterday. If you were in the stock market, you got the same percentage return. And that spin is wild. Moving on, obviously, from that, I just wanted to talk about some of the other things going on. House delays vote on tax cut, debt limit plan amid deficit spat. So the other thing that's kind of been touted ever since really Trump was speaking in the Rose Garden was not only are we doing this tariff thing, but we are also eyeing up a pretty large tax cut. Right now it's getting delayed, but that might be something worthwhile to pay attention to. Another piece of positive news, Russia and the U.S. hold fresh round of talks in Turkey on restoring ties. So this might be another thing. Like imagine the world in which the tensions really simmer down between the U.S., Russia, Ukraine, and the U.S., like kind of the threesome we have going on right there. Imagine if those tensions come down and also China just agrees to whatever Trump wants. That would be the 1-2 combo punch that would probably most likely send the stock market to not really an all-time high, but pretty darn close. Now, obviously, it could break the other way, but I'm just saying pay attention to these narratives because they're larger macro things that could clearly have an impact on the entire situation. So pay attention specifically to what's going on with China and tariffs. Pay attention to what's going on in the U.S. with the debt limit and also tax cuts. And then obviously right now we have inflation and Jerome Powell and what's going on with monetary policy. And then also on a global tension level, pay attention to what's happening with Russia and U.S. because depending on if they all break one way or the other, could be very bullish or bearish, or maybe it's going to be a little bit of a mixture, some good, some bad, and we have to start weighing out what is better and what is worse. With respect to today, remember, you guys, hang on. I wanted to go over this one. Right here. This is free, 100% free, mattkohrs.locals.com. I break down the previous week, what to look forward to in the upcoming week. I do want to remind you that we have earnings season starting tomorrow and the PPI reports coming out tomorrow. Today, we got the consumer price index, the inflation for consumers. Tomorrow, we get the PPI, the producer price index, inflation for producers. On top of that, we are officially underway with earnings season. JP Morgan, BlackRock, Wells Fargo, Morgan Stanley, some of the heaviest hitters in the financial sector are going to be telling us what's what and who's who and their thoughts on this 90-day pause. So I'll personally be paying attention to those guys tomorrow, and I highly recommend you do as well. On top of that, I give you all just a little cheat sheet of the things to pay attention to throughout the day. So for example, we already got the CPI report and the initial jobless claims. Folks, if you're late to the show, first of all, demerit. We started at 8:20. If you're just joining right now, I appreciate you joining, but you're late to class, and I have no other option but to give you a demerit. So I know that that's a little harsh. I know that's a little hostile, but I have to do it so you don't do it again in the future because you're going to be missing important information. So anyway, if you are a person with a demerit hat on right now, you probably missed the fact that at 8:30, we got the newest CPI inflation report came in lower than expected, as in inflation is lower than is expected, as in that's a good sign. That's taking a little bit of the extreme pressure off of Jerome Powell, obviously the chairman of the Fed. Now, at 1 p.m. today, we're going to get the 30-year bond auction, so pay attention to that. And then tomorrow, we're getting another inflation report, consumer sentiment, and a little bit of a speech from the Fed member Williams. With respect to seasonality, over the past 27 years, the Bulls have won this day 52% of the time, so a little bit better than flipping a coin. But when the Bears win, they win with greater size. So the seasonality is kind of bearish of the day. But honestly, this particular time, I'll be the first to admit that I'm even not weighing seasonality that much right now because this is such just a news-driven environment. But I do want to let you know tomorrow to conclude the week, once again, the Bulls win at 52% of the time. And as you can see, when they win with greater size, and it's a nice bullish trend for tomorrow. So Bears seasonality today, bullish seasonality tomorrow. The week in general is one of the most bullish weeks of the year. And then also the month of April is also one of the bullish months. So just want to let you know that this is all free, macrosoutLocals.com. You can sign up. It's pinned to the top of chat. If you want to join up with the Goonie Trading Discord, you can also do that for free for the first month. This is more the premium tier. And like I said, when you sign up, if you put in that promo code Goonie, Goonie, your first month is free. The entire purpose of this is for you guys to get like a test drive. I don't want anyone to feel like they got. So you get full access to everything. My trades, the Piper Signal, voice chat, text chat, all the previous lectures, all the other members and what they're thinking about on a daily basis. You get a full free ride for an entire month. If you like it, great, stick around. If it's not for you, just make sure to cancel your account within the first free month and you'll never be charged anything. My purpose for doing this is because I believe within 1 month, really, I think I could do it within 1 week. I could show you that being in there from just a value perspective is far better off than not being in there. And once again, the easy way to do that is by just making the entire first month free where there's no risk to you. But just to prove it to you, literally one of my plays yesterday called out, made $45,000. So Piper didn't fire because vol was too high. But obviously, right as soon as the announcement came out, we were all trading it together in the Discord. We were there. We're like, what's going on? We quickly understood the news. And then right here, I just immediately got into calls on SPX and made a nice 45K in 1 day. So obviously that would have paid for almost the better part of 100 years of you being in the Discord, that one singular trade. So just to show you that not only am I putting my money where my mouth is for you guys to be like in the Discord, and I'm giving away the first month for free, but just to show you like, okay, is there value? Well, yeah, that's one individual trade on top of the private lectures, the Piper Signal, and really the community as a whole. So check that out. And it's pinned to the top of chat. It's in the description of the video, but I cannot remind you about this enough, is when you sign up, make sure to use that code Goonie. And then when you do, it's going to look like this. To get into the Discord, you have one of two options. You could click this giant Discord button right here and just click it, and that will get you there. Or you could come to the second pinned message and find the Discord link there. So that's what happens after you're a supporter on Locals. Locals is the account management, payment management system. If you are having an issue getting your Locals connected to your Discord, there's a giant welcome message and a video on how to do it. But if you have any issues, you can email me, media@matthewkohrs.com, or you could DM me, MMK147. I do want to remind you that it could take up to an hour to process your account. So if you're doing it and you're like, hang on, what's going on? Just wait 1 hour. The database updates at the start of every brand new hour. So if you're having any issues and you're like, dude, man, I already think I synced it and what's going on? My first suggestion is just wait. And then if an hour or two pass and you're still not getting access, that's the perfect time to personally reach out to me, MMK147, or media@matthewkohrs.com. You could click on this giant button, or you could come to this message and use that link. That's probably the best way to do it. So hope to see you there. And on that note, let's check out how the market is doing. Okay, we're pretty much where we've been ever since 4 this morning. 4:30, 4:45. Obviously, huge rip yesterday. We're giving a little bit back this morning, but overall, let me give you kind of a breakdown. Let me show you this. Let's go to this. Let's go to this, and then let's go to this. Okay, so from a daily perspective, this is the actual index. When I say the actual index, I mean like the real McCoy, S&P 500. Obviously, we had kind of 4 days where we were just down in this territory, like the low, the low, the low, and then this God candle, and it was so much that not only did we take out the high from Tuesday, Monday, and Friday, but we got the upside gap fill to 5,391. I would say if you're a swing trader, like a person looking at the daily chart, I would say a very evident goal is 5,571. We might be talking about that today, but that is so obviously the next upside gap fill. Now, I do want to just update this to see where we are at. We are scheduled to open at 5359. 5359. So right here, Obviously, that's a little bit bearish. These are some of the key open interest levels. As you can see, I'm kind of like consolidating them because they're all messed up. And this is a bit of a transition zone, this white box, but right where my cursor is, right here, 5359. So I would say out of the gate, a bullish target would be 5,400 and your bearish target would be 5,315, depending on which way it breaks. Coming into today, my bias is going to be a little bit more bullish because of obviously yesterday, we have the upside gap fill. I noticed that today and tomorrow, the option chain, which was put dominated, is now call dominated. And the same can be said all the way up to Monday, Tuesday, and Wednesday of next week. And then remember, next week's a bit weird because of Easter, that the Friday is really Thursday and the market's closed on Friday. That one is still put dominated. But if we see that one, April 17th, go from put to call dominated, that would really be representing, at least to me, some serious structural change. But I did want to let you know, once again, today, tomorrow, Monday, Tuesday, Wednesday, we're all put dominated. And now because of what happened yesterday, they're now call dominated, which is telling me in the shortest term, we're seeing the bulls trying to pull something off. We're seeing them kind of rear their head, and will it be sustained? Like, will it keep going? I don't know. Like, your guess is as good as mine. But I just want to let you know about why my bias is what it is, not only because of the daily chart of, hey, we're making fresh highs. This might be a bottoming structure. I see this upside gap fill, but also in the derivatives market, the underlying market right here. Here's a look at the S&P 500. We're getting a better idea of like, okay, where is the money going? So the full chain is still in fact put dominated. I don't want to tell you that this is so evidently bullish because it's not so evidently bullish, but we're potentially trending in that way. Obviously worthwhile to pay attention to. So anyway, we're opening rightly, like if we were to open right now, roughly where my cursor is, obviously we have this downside target. It's this low from 3 p.m. If we start to go 5,400 is kind of a larger open interest level. It's a key psychological level. And then we start to slowly drift up to this transition zone. On a 0 DTE perspective, above 5,460 on a 0 DTE, like just what's happening today, this would be bullish. That is the GEX, the gamma, and the DEX, the delta transition zone, where we have bullish dominance and below it is bearish dominance. So once again, in the shortest time frame, below this, I would say, okay, maybe the bears have a little bit of control relative to what the options market is telling us. And then this is the transition zone. And then above this, that's where I would say the bulls are starting to become a little bit more dominant. And obviously, these yellow/golden lines are the major open interest levels that I'll personally be paying attention to. This isn't all of them. I was just trying to get them close because right now, when you have such an expansive range, like my whole chart would look incredibly messy. So depending on which way we trend or not, I'll update it. But for right now, these are the key levels I'm watching in the very short term. And then obviously, if we get trending, I don't want you guys to forget about 5571, which is currently off my chart. But if we really get trending to the upside, pretty evident play to that upside gap fill. And just be careful because there might be like a random ass rejection there. So just want to call that out. And right now, how are we looking in futures? 5-minute and 10-minute are bearish, but the 30-minute and the 4-hour are bullish. 5-minute and 10-minute are bearish, 30-minute and 4-hour are bullish. So between the shortest time frame, the 5 and the 10, compared to the 30 and the 4-hour, we're seeing a little bit of a mismatch. In the short term, the bears a little bit dominant, but in the medium term, the 30-minute and the 4-hour, we're seeing that the bulls are still holding on. So a perfect trade setup for me, if I could dictate how today goes, like in an absolutely perfect manner, we're about here. So we're scheduled to open roughly here. What I would want to see is a pump, a little bit of a pullback, making that higher low that I can, on the swing back around, go long and try to play it back up to this transition zone. And then at that point, pray that we actually break out of the transition zone. So we're scheduled to open roughly here. This is exactly what I want to see. And I don't know if it will happen, but I'm telling you, this would be my A+ trade setup of the day. Right there, that situation, and it's in between arrows 2 and 3, right as 3 is starting to form, like a little bit of that pump, is where I would ideally go long. So not only would I want to see that as price structure, obviously I would want to see the 5-minute and the 10-minute take out the top of their EMA cloud, so price momentum's a little bit stronger, but to really drive that point home, I would want to see quite a bit of bullishness in the options market. So here's the S&P 500 complex, the combination of SPX, XPY, XSP, and ES. So I would want to see the delta pumping, ideally calls being bought and puts being sold. And then I want to see that simultaneously happening in the Mag 7. The Mag 7 is obviously the combo of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. The reason I bring that up is because recently it's been kind of a hard trend to read because the Mag 7 and the S&P 500 have been completely divergent, which really makes no sense because the Mag 7 is like almost 30% of the entire S&P 500, and it's even more of the of the Nasdaq 100. So it's weird that even though there's a lot of similarities, the bets being placed on them were not similar whatsoever. So I would like to see that do the exact same thing. So not only am I looking for this price action, I'm looking for options to support that. And then if it does, I'll be able to play it to the upside. So that's kind of what I would like. Like if I could wave a magic wand of what I think the perfect trade of the day would be, it would be that. But obviously we have to wait to see if it opens and maybe something wildly different happens. I'm not even saying I'm highly confident this is the play. I'm just saying if I see that, that would be that perfect A+ setup that I would be very much looking to take advantage of, especially because you could see on the gamma structure, we're still in the full chain, not technically in the 0 DTE, not even for the remainder of the week. But when you consider all options, you can see this red. Remember, red is negative gamma. Negative gamma is not bullish or bearish. It just means slippery price action. It means whichever way we get going, the market makers are going to be supporting that movement and they're going to make the trend more extreme. This is true for a bullish push or a bearish push. Obviously, the opposite, and we've shown you those days where there's a lot of purple on the chart, that's positive gamma, and that's more of sticky price action. That's more when the market makers are going to be reverting whatever move is happening. So right now, based on the full chain options, the full chain, not just today's expiration, but all expiration put together, we are in a negative gamma environment, as in whichever way we get going, we can very much get going that way. We can very much get going that way. So that is going to mean if you're catching the trend, congrats, because you're probably going to be very, very right. But if it's going against you, you want to be very mindful of what your risk is, because if you're on the wrong side of it, it's kind of like when you're caught in that mindset of like, no way could it get worse. I'm telling you right now, it could definitely get worse. It could definitely get worse. So that's with respect to the overall market. Let's quickly go through some of these other things. So just looking at the ETF SPY, upside gap fill of 554.81. Remember, SPX is more important than SPY. SPY is an ETF created to mimic the SPX, and that's all it is. And it's more of a retail-centric thing. But when you're talking about the big guys with real money moving the market, they're not trading SPY. They're trading SPX. The same thing with the Qs. The QQQ is an ETF created to track NDX. NDX is the actual NASDAQ 100 index, and then the Qs, QQQ, is the ETF created to track it. So once again, if you look at the big money and what they're trading a lot more of NDX than they are QQQ. SPY, QQQ, like I said, they're effectively, you could think of it as like a retail-centric product. But anyway, SPY has the upside gap fill. The Qs actually already got both of their upside gap fills yesterday. They took out 550 and they took out 465. Upside gap fill, upside gap fill. I would say the next clear level is 480, the high from Wednesday, that excitement coming into this announcement. Bitcoin holding 80K, maybe a little bit of a liquidity sweep, a little bit of a fake out breakdown, but would love to see this get back above 88. MicroStrategy, 24% gain yesterday. This is the largest gain, at least on my personal watch list, and it was insane. I mean, look at that, 24% gain. It ripped from 241 all the way up to 296, at one point battling it out at 300. I'm looking for this to get back on top of its EMA cloud and take out 320, and then ideally from there 343. Right here, Tesla, a monstrous 22% gain. Looks like we kind of triple bottomed here at 221. Obviously, I'm looking for it to take out this range. 292 would be the level, because not only does that mean it's getting on top of the EMA cloud, but literally we're just breaking out of potentially this like double bottom range. So looking at 292 on Tesla. Palantir, another phenomenal day. Look at all these gains. Everything had a phenomenal day. 19% gain on top of the cloud, looking for it to take out 98. Looking at NVIDIA, going to the top of its cloud, looking for it to take out 123, 124. Broadcom, similar situation, gain of 19%, 18%, looking for it to take out 200. Meta, another big pump. A little bit more room to go to get on top of the cloud. Needs to take out this key level of 600. But from there, I'm looking at the Tuesday, March the 25th high of 633. Apple, 15% upside gap fill all the way to 221. Looking at Microsoft, nice 10% gain. Not that close, not that far away, I should say, to its breakout at 396. So obviously watching 400. Netflix, one stock that's held very sturdy throughout this whole thing. And on top of that, got a nice 8% gain. You have Rum putting in a 17% gain. Coin putting a 17% gain. ASML putting in a 15% gain. Amazon putting a 12% gain, DJT a 21% gain, Qualcomm a 15% gain, Google a 10% gain. I think you guys are kind of like understanding the picture here of what in the world either is or isn't happening. Basically, it was yesterday, at least, it was gains galore, and I cannot by any means make a promise here, but I am personally looking for ideally the gains train to continue. Maybe I'm right, maybe I'm wrong, but that is kind of like the base case of what I am paying attention to right now. And really what I would like in the shortest term is for this to get this upside gap fill at 5572, because obviously it would mean that a lot of these other things are also looking pretty good. Let me do a quick update here so we can get an idea of where we're scheduled to open. We are 5364. 5364. So roughly where my cursor is. Bullish target number 1 would be 5,400. Bearish target number 1 would be 5,315. I always recommend having a bull case and a bear case, especially for active trading, just so you don't have to think about it when things are playing out in real time, because in the heat of battle, things can get a little bit crazy. Just to show you guys, I haven't traded any of my futures accounts yet. I did survive yesterday, and if I'm being completely honest with you, I only survived yesterday because of pure luck. So when I left you guys, I think I was down $1,000. My per account, I was down $1,000, and then I made another trade, and then I was down 2.5. And then I don't even know what I did, but I tried to chase something, and I think I was bearish and the market started to pump. And then before I knew it, I was down 7.5. And remember, the accounts yesterday started with 60K. So I was down to 52.5. I lost the majority of the account. And then the 10-year note auction came out at 1 p.m. and I was long 3 contracts. I was long, and just that initial reaction was so big that not only did it get me my 7.5K back, but it actually got a fill on the other side of where my order was. And I ended up making a net 1.5K. So I went from down 7.5 to up 1.5. So I had a 9K swing in about a couple minutes, and that got my accounts from being seriously beat up to net green. And that's why right now these accounts are at almost 63,000. And today is my 8th day of trading. So as long as I don't blow out these accounts today, I will be able to do a payout request. And that payout request is going to get denied because of the various rules that I've broken for taking too large of intraday hits. But that's fine. Like, all that means is you have to trade for another 8 days. So I want to be clear, this right here, as long as I don't blow out the accounts today, I'll be able to do a request today. That request is not going to get approved. And then all I have to do to get approved is trade another 8 days. So I just want to clarify what's going on with these accounts. I'm still in the buffer build out phase, and it feels like I need more of a buffer because of how much volatility is just insane right now. But I'm hoping that vol starts to die just so we can get back to what I would refer to as like my normal trading methodology, my normal trading system. So anyway, I just want to be as transparent as I possibly can. I had a horrible day yesterday. I got very lucky. The accounts are still good. I'm going to request today. It's going to get denied, and then I have to trade another 8 days, and then ideally in that second cycle I'll be able to get my first payout on these particular accounts. So like I said, I know it's a lot, I know it's a bit confusing. I'm just doing my best to be transparent about what's going on, the state of it, and all this stuff. But obviously on the approvals, the denials, or any interesting news, I'll make an independent video and throw it up on that other channel. Obviously, if you're on Rumble, it's all on the same channel. If you guys haven't subscribed to the music channel or the new Evergreen channel, make sure you do so. It's in the description of the video. If you're on YouTube, I highly recommend checking it out. What is this? Matt, I remember that you have mentioned in the past automatic crypto trading programs. Are you able to recommend any that are beneficial and easy to set up? Keep up the great work. No, I would never just recommend someone else's random ass system. I would recommend putting effort into building your own. Folks, there's no such thing as like a freebie, especially in the world of trading. So if I guess I just wouldn't. Nothing comes to mind where I'm like, this is an amazing system. Just throw it on your like Coinbase account and get it ripping. It's just, especially for day trading, it's like uniquely difficult. So I would say the best path is for you to develop your own. That is because then you understand it, you know what's going on. 100%. That is what you should do. 100% is put in the effort, learn what you need to learn, and start building out your own. Don't be reliant on other people. Don't like it. It's like in this world, just like a life lesson, don't be reliant on other people. But then in the world of trading, it's you. Like, I mean, as much as people like to listen to other people and they either find people that confirm their bias or go against it, at the end of the day, it's you buying and you selling. So you need to be comfortable with you buying and you selling. What about StreetBeat? StreetBeat is more of like an investing one. I like that. I use their AI system for my investing, but remember, investing and trading are wildly different beasts. StreetBeat doesn't do day trading. It doesn't do day trading at all. I think it was last week when the market was at recent lows, you expected a pop up at some point in the next few months, not taking it into consideration in Trump announcement. Then you had mentioned earlier a deep drop. You just want to know your thoughts and reasoning for this theory. Wait, what? I don't know what those two things mean to each other. I mean, it's all intertwined. My reasoning of why I predicted April to be a big pop in April. What was this? Then you had mentioned another deep drop. I don't know when I mentioned a deep drop whatsoever. I was predicting a drop to late March, early April, and then I've always been saying I think April's going to be very bullish. I mean, I've been saying that for many videos, for many streams, for anyone paying attention. That's been like my base case, and the base case is because of from the political front, I didn't expect the trade war actually to even go along and get as extreme as it did. I thought the Wednesday announcement of the Rose Garden would be the low. I truly thought that. But obviously it got a bit more extreme, and I still believe it's going to get resolved. So yes, you have to take politics into account. Then you have to take seasonality into account. April's a very bullish month. Then you have to take the option chain into account. So we've already been talking about that, of how it was extremely bearish and it's getting less bearish, and we're seeing potential signs of a reversal. And then obviously the question is, does it have legs? So you have to take it all into account. You wouldn't just look at a singular thing. If you're looking at a singular thing, you're going to live by the sword and die by the sword, and you're most likely going to lose in your account. You said by the end of the year. I mean, it depends. Like, folks, do you know how many videos and streams I've been putting out? Yeah, I've said that I believe that the stock market's going to be net green at the end of the year, and I still stand by that. Once again, that's just understanding the monetary drop back or monetary policy backdrop. We're going to get rate cuts. The money supply is going to go up. We're probably going to have a little bit of a risk on environment into the end of the year. I still fully believe all of that. Any thoughts on the basis trade unfolding? It's not going to happen now. Did you see the stock market? I mean, yesterday morning, a mere 24 hours ago, that was a fair thing to consider, of like, is the basis trade going to blow up? But not now. Have you seen yields? Have you seen bonds? They got saved. I truly believe people were going to Trump and saying, if this goes on much longer, the carry trade and the basis trade are going to blow up, and we're going to have a serious Lehman Brothers-esque event. And he said, okay, cool, I don't want that. So he gave us the relief. But I mean, literally 24 hours ago, the basis trade blowing up and the carry trade blowing up was a fair thing to consider. Obviously not any longer. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. I should say, let me amend what I just said. The chance yesterday morning, there was a much higher probability of the carry trade and the basis trade, two independent things. One relates to treasury, spot treasury, and then futures, and playing that arbitrage at a highly leveraged rate. And the other thing has to do with just like the interest and a currency swap related to the yen and the US dollar. And yesterday morning, a mere 24 hours ago, there was a much higher probability of those blowing out and taking many hedge funds down with it. I can't say there's now a 0% chance, because you never know what's going to go on, but I would say that the odds of that being a consideration have like notably plummeted. I don't think they're a little bit lower. I think they are vastly lower. So I should just be clear, because as much as I tell you guys to not speak in absolutes because you have to train your brain to know that anything can happen at any moment in time, I should be really practicing what I preach and do the same thing. So I think the odds of it are extremely low, but I wouldn't discount it. But obviously, based on news, as we learned from yesterday, one little announcement, one little development can change the entire game. So we kind of have to be a little bit prepped for that. All right. Dingity ding ding ding. We are open. Like I said, bearish target down here, 5315. It is the low from the start of power hour. And then if we catch our footing here and we start to push, bullish target number one would be all the way up here at 5,400. So as I always do, I'm just going to wait for the market to open. I want to see what the flow is. I want to see, is the options market bullish? Is it bearish? As of open, the SPY took a little bit of a hit while the Mag 7 is perfectly flat. Coming back to just like the structure, the texture of the day, we are very much in a negative gamma environment, as in whenever we get going, we could just really get going that particular way. It looks like we have some long puts at 5310. That is that low from power hour. Obviously worthwhile to pay attention to. If we zoom out, we have some sold calls at 5,430. That's a strange one. We have some long calls at 5,480. So I would prefer that this player makes a lot of money, because if they make a lot of money, it means I'm going to make a lot of money. But then this is quite the bearish position. There's a little bit of a positive node here at 5,230. And we might be talking about that today. I guess I'm trying to not make any conjectures bullish or bearish at this moment, because we're only 2.5 minutes into the day. Just chill. I really, really think it's disadvantageous as a day trader, as a scalp trader, to be trading this early in the day, especially recently when the market opens just been like a whippy, like pain in the ass mess. So I would really just say, let's just sit back. Let's just chill. Let's see what's going on. I see some red on the chart, but that's more so of a function that we just had such a massive rip yesterday that we're having just a little bit of a pullback, a little bit of a breather. So I wouldn't look at that red on the chart right now and panic. It's just because when you have such an ungodly rip, it's absurd to be like, no, that just has to keep going. Like generally you're going to see a pullback. Same thing with massive drops. When you have massive drops, it's natural to expect some sort of a little bit of a relief, and then the market gets to decide, doesn't want to keep going that way, does not want to keep going that way. So regardless of if you're bullish or bearish right now, if you're looking for this to pump, if you're looking for this to dump, whatever side of the fence you're on, just chill. Just chill. What do you think about volume profile? I mean, all of these things are tools. You just have to know when to use them, how to use them. There's no such thing as like one indicator or one metric that is the end all be all. And I find a lot of retail traders try to contort one singular thing into being the only tool they use. And like, that's just it. Of like, nope, I saw this on the volume profile, has to be bullish, has to be bearish. It just shows you where people have transacted at. If anything, like you're going to get very similar information to VWAP. VWAP is just giving you an idea where for that trading session, where the average person is involved. And it's not the exact same, of course, but like you're getting very similar information. Like if you look at the math of how RSI is computed or MACD, a lot of these things are just slight little differences from everything else. And what I need to, I guess, like my clear point, whether you're talking about RSI, MACD, Keltner channel, Bollinger Band, VWAP, volume profile, by definition, those are all backwards looking. They're all a different way of showing you and indicating to you what has already played out. So that brings into question, do they have predictive forward-looking capabilities? Some of them are better than others, but once again, they are all by definition backwards looking. And the only tool that you really have that is by definition forwards looking is the options market, because these are all plays that are set to expire in the future. So when you look at price action, even price flow in itself, like the price we've already seen today, this is backwards looking. It's telling us what happened at 9:30, what happened at 9:31, what happened at 9:32. So then the question is what happened a couple minutes ago indicative of what's about to happen? Does it have predictive capabilities? Sometimes it does, sometimes it doesn't. That's the point of you building out a strategy either related to direct price action, volume profile, RSI, MACD, and maybe you can find a certain edge. But if you're just talking about a singular thing available to us as retail traders that has forward-looking capabilities, by definition, that is the options market. The options market is what traders think is about to happen. That's what option bets are. While if you're trading, that's just telling us about the price that happened at that moment. Like I said, all these indicators, volume profile, I can go on and on. But you have to ask yourself, is the tool you're using forward-looking or backwards-looking? Most things in the world of trading are backwards-looking because it's some sort of data representation or mathematical computation of what's already happened. All these indicators are like, nope, this is what we've just been seeing, and not necessarily telling you what they think they're about to see. And I think the best way to do it is to pair those. I'm not against them. I'm just saying know the limitations of your tool. So to me, a complete trader is a person pairing these together. They're using technical setups, whatever indicators they believe have the best edge, and the options flow together. They're putting all of those together because your indicator tells you maybe a mathematical breakdown of what's happened in the past. Are we at extremes? Price action tells you, are we making higher highs, higher lows? It's telling you a little bit about momentum. And then you're pairing that together with options flow. And then that's what I would consider to be those perfect trade setups, is where everything's in alignment. You're like, okay, the technical support this, the indicators also support this, and the options flow support this. And when I say this, I mean whatever your trade is. That's the perfect setup. That is by definition the perfect setup, is where you're seeing this agreement and this alignment across the board. 100%, I will not, like, I've never heard any argument that holds water that would disagree with that. And I think too many people get caught up in just one of those, and specifically in retail trading, just because it's so easy. Everyone's like end all be all is just charting. They're like, did you see this bullish breakout? Did you see this pennant? And like, I'm not against those, but by definition, they are backwards looking. So you just, like, once again, you have to know the limitations of your own tools. How are you getting candlestick patterns on spot gamma? I'm a beta tester, so I get things that are slated to come out in the future. Thanks for showing up each morning. Shout out. On the VWAP, where can I find stats on resistance and rejection off the difference? You mentioned two deviant VWAPs from what I've heard. Yeah, go do the research. I don't know. Like, at a certain point, you have to be willing to help yourself, Dan. Like, did you ever try to do this? I mean, I got it because my background is in computer science. That's what my degree's in. And then I'm also a college dropout. I was getting my master's in statistics. So I got all the data and I did the work. I started crunching the numbers. I started doing all this backtesting. I collected data and I did an analysis and another analysis and another. And then by the time you do thousands and thousands and thousands of hours of research and analysis, you start to come up with a little bit more of a game plan. But like Dan, like, yeah, or anyone, not even specifically Dan, anything in the world, not even just trading, the people who win at this are the people who, like, yeah, sometimes, of course, you need direction because maybe, like, of course, in new fields, like, sometimes there's the argument of you don't even know what you don't know. So, yeah, okay, of course, you need a mentor and some guidance. But on top of that, the major thing that's going to define your success or not is your own obsession. It truly, in anything in life, if you have to find that one thing and just become singularly obsessed. And you just put in hours and hours and hours of work. It is very hard in this particular world right now, this day and age, with the access that we have, that if you're putting in thousands of hours of effort, it is very difficult for you to not be successful. It is possible, but I could also tell you the only way to be successful is to put in that effort. So if you put in all that effort, yes, there's a chance that you still fail, but I could tell you the only way to be successful is still that as a prerequisite. Like the game gets started with your obsession level. And the only way in the long run to survive the gauntlet that is trading, active trading, I'm not talking about investing. Investing in itself is way, way easier. If you're a person, you're like, you know what, I buy stock and I'm going to check it every 6 months, every year, and I'm going to come back in 5, 10, 20, 30 years. That game is way, way easier. I'm talking about active trading. When you're like, nope, I am a day trader, I'm a scalp trader, I'm a swing trader. If you want to be successful in that game, no one can promise you success, but a prerequisite for you to even have the slightest chance of success is you have to have that self-driver attitude, the self-motivating attitude, and being willing to put in, like, over the course of many years, thousands of hours of research and effort. And I'm saying like legitimate work. It doesn't just count to sit there and look at candles and be a degenerate and be like, oh, I'm yelling in calls. Like, I think there's a lot of people who think it's work and putting in effort when they just fire up their Robinhood app and they look at it and they're like, okay, like, and they're just chasing the recent sentiment and they're like, no, it's bullish, it's bearish, and they're chasing zero DTs, and then they get frustrated that they're always blowing out. And well, they never put in the effort to learn truly the math of options and learn why you shouldn't be trading zero DTs, and to learn more complicated thing like options flow or research their own strategies. I'm talking real effort. I'm not just talking sitting there and watching your chart update and do this and do that. That's not effort. Of course, there is something to be said about time in front of the screens, just because you get, I would argue, like a subconscious feel for certain circumstances that maybe you can't like perfectly articulate, but there is, when people have gut feelings and they seem to be right, it is your subconscious doing a certain amount of mathematical computation based off patterns that it's seen in the past that maybe you can't on the forefront of your mind articulate, but there is something going on. So I'm not completely knocking it, but I'm saying if your only effort that you're putting into this game is by just looking at charts, like, what the fuck are you doing? Go do like actual work, like actual research. And I just don't see that happening that much. But that also explains why 95% of retail traders lose money, is because they're 95% of retail traders are not doing what they need to do to be successful at this game. Folks, yes, there's a ton of free internet or free information on the internet, this show, these videos, and there's a gazillion other content creators that maybe you find one that resonates the best with you. That is a great way to go. Another great way to go is podcasts. There are many successful traders out there. I'm talking multimillionaires, multi-billionaires who share their thoughts and insights. Okay, that's a great resource. And then on top of that, do you know how many books you can buy that are just like whatever, $30, $40, $50 that are just like some expert, and they're just all their perfectly articulated, distilled knowledge in one book? It comes down to you and just like how much effort you're going to put in. Like, there are books, there are podcasts, there are videos, there are the things that, hey, like right there, I was just given the question of, okay, like you want to know the stats of it. Did you try? Go right now. I get that I started with a little bit of an easier time because I started with programming knowledge. But right now, with the current state of AI, none of you have an excuse anymore to not like have your own, I guess, comprehensive framework of the market. You can easily upload the data and then ask the AI system as many questions as you want. So if you're sitting there and you're just like, yeah, no, I was told this is a good pattern to trade. Why? Why is that a good pattern to trade? Did you do the research? Did you load in the data? Did you ask it the questions? I think there's too many people who hear one thing. Well, this is true in the world, but it's also specifically true in trading. They hear a thing, one time, and they just like assume it's true. Like, yeah, no, I heard that. I heard going short on a head and shoulder setup is good. Okay, maybe it is. Do you guys know? I mean, we've talked about this in here, so I know some of you guys know. How often does the head and shoulders work out? What is your probability of success? We always hear that it's bearish, and we always hear that we should take that trade, but how often is it right? When should you get in? When should you get out? And with that, I guess I'm using that as an example because that's actually the best technical pattern. It works 83% of the time to give you the answer to this particular quiz. But then if you look at other things, when people are like, oh, it's a bullish pennant. Well, how often does a bullish pennant work? The answer to that is 55% of the time. You only have a 5% edge, while if you're trading a head and shoulders, you have a 33% edge. And those are the types of things where, especially, I guess I'm in a certain way picking on technicals, people look at technical patterns and they assume that they're all the same. They assume that they all like work the same, tell you the same thing, have the same odds, and you should trade them all. And it's just not true. It's simply not true. And it's those types of things that people hear it once and they're like, oh yeah, that's good. And you see that all over. You see it in life where like people just don't do their research. Like people, I mean, psychologists have studied this, and humans are biased to believing the first thing they hear as being true, which is kind of a tip. If you're in school and you get in trouble, if you're in trouble at work, or if you're talking to cops, humans do have a bias to believe the first thing they hear. So if you're like in an argument, or if you're trying to tell someone your story, you should be the first person to speak, because for whatever reason, I don't know why, but for whatever reason, when humans hear a story first, they tend to believe that story for whatever reason. And it could be absolutely ludicrous, but we do have a bias to believing the first thing that we hear. All right. Hopefully we put in a bottom. Remember how I said I wanted to see a pump, dump, pump? Well, we got a little bit of a pump, a little bit more of a dump? Or are we going to recover? As of right now, we have lower highs, lower lows. The 5-minute and the 10-minute are bearish. The 30 minutes testing. I would love for this to hold. The low that we're already seeing, I don't really want that to be breached. If it is, things would be favoring the bears a little bit more, obviously, in a short time period. But 5-minute, 10-minute are also bearish on the NASDAQ. S&P 500 right here. NASDAQ right here. Both of these in the shortest time frame are bearish. This is just a momentum reading. Literally all this is EMA. Like there's nothing special with this indicator. I want to be very clear. I get this question a lot. This is literally just various like length EMAs being put together. And then I want to know, what is that momentum? Are we above it or below it on the 5-minute, on the 10-minute, on the 30-minute, on the 4-hour? There's nothing special about this. This is literally just EMAs. And I like to, specifically in these environments, check what's going on with the 10 and the 30. And then for my swing plays, I like to check the 30 and the 4-hour. But for day trading, I'll pay attention to the 5. But with the vol being so high, I put less emphasis on the 5. I care more about the 10 and the 30. So watching those right now, shortest time frame a bit bearish, but that's not surprising, being we were trending down. Maybe finding a bottom right here. It's actually bottoming right off of 5,300, which was that key level that we saw over here, 5,300. And then on top of it, I called this level out to you. This was that low, the level. I didn't pick this randomly. It was literally the low that we saw at the start of Power Hour yesterday. So this is exactly why when the stream started, before it started, I told you bearish target number 1. Folks, the effort and the research that went into this is just not firing from the hip. It's knowing technicals. It's knowing options flow. This one was more specifically options flow of knowing that we had serious open interest right here, 5,300, 5,310, and then also pairing that up with the low that we saw yesterday. How did I know that this was a potential bottom that we had in reaction? Because I looked at the current open interest and I looked at the support from yesterday. Just putting those two things together. It's not rocket surgery. Like that's how I called that out. So what I'm doing when I call out these levels, it's all very learnable. This is not some high-end math thing. It's just, if anything, it's rather rudimentary. But what's crazy is we now live in a world where even rudimentary skills escape the common person because it's just no one has fucking effort these days. They just don't. People like sit there like fucking couch potatoes and expect the world to come to them, and it's just insane. All I can tell you is if you want to make a shitload of money at the market, you're going to have to be obsessed. Same thing, to aspire to the heights of any difficult field in this world, you're going to have to put in a lot of effort, and no one's going to make you do it. Your mom's not coming, your dad's not coming, your wife, your husband, it's just all you. Are you going to fucking do it or not? It's that easy. Matt, we going green today. I don't know if you're telling me or asking me. I hope you're telling me, and I hope you're right. So much moralizing sounds like a sermon. I really don't know shit about fuck when it comes to religion, but I am a big fan of Thanksgiving. Not necessarily sure if that one was created by our Lord and Savior, Jesus of Nazareth, but I would admit that I am a big fan of Thanksgiving. Big fan of Thanksgiving. We get to CPI today, guys. Yes, we did. Jason, you are so many hours late. You are an hour and 18 minutes late. Matt, we appreciate you so much. That's so kind. I wish Matt did audiobooks. I just am aggressively reading and swearing throughout children's stories. My own Matt's twists on just some of our childhood classics. Could be an interesting genre to get into. A little bit of a pop here. How many minutes? Okay, all right, we have the 15-minute Orbo set up now. If you don't know what an Orbo is, it's the opening range breakout or breakdown. So basically, it's the first bar for that time frame of the day. So you could look at the 10-minute Orbo, the 15-minute Orbo, the 30-minute Orbo, the hour Orbo. If it's an hour, they call it initial balance for whatever stupid fucking reason, but it's all the same thing. So it's that first bar of the day. So for example, we're already 15 minutes into the day. All you do is mark out the high and the low of that first bar for whatever time frame you care about. And that's an interesting thing you guys could study. And I've actually done a lot of work on that myself, of taking the breakouts or the breakdowns in certain circumstances. So I would say the most popular are the 15 and the 30 minute, maybe the 15 to 30 in the hour. You could do the Orbo on whatever time frame you want. You could be like, dude, I'm doing the 30 second, the 1 minute, the 3 minute, the 5 minute. I can tell you, I've done a lot of research on this. The odds are pretty much 50-50 up until the 15 minute. So if you're looking at the 1 minute, the 3 minute, the 5 minute, the 10 minute, hey, maybe you're able to find an interesting edge here or there, but I'll just tell you from my own research, the data and the strategy of like positive or negative expectancy, it gets interesting, much more interesting at 15 minutes or above. So if you're trying to start somewhere, I would start with the 15 minute, the 30 minute, and the 1 hour Orbo. And maybe from there, you're able to find something that I couldn't find on smaller time frames, maybe larger time frames, totally possible. Oh, I like that pump. Did I miss it? All right. Obviously, I haven't done anything today. Not yet, at least. Not yet. I like that recovery. I like the pullback. I like the potential higher low. I would prefer that this wick holds at 18,752, and we kind of start to pump out of that. It's 951. So we started to get going, and it's now getting hit. Odd. We looked like we were recovering a little bit. The Mag 7 options flow is not looking good. We just hit a delta low, and more specifically, you have put delta dropping and call delta dropping. Looking at the S&P 500, it's the opposite. You have a bunch of puts getting closed out, which if that keeps happening, you could see a Vanna rally for sure. Remember, Vanna rallies happen when the puts are getting closed out and vol drops, and then you see the 0 DTE doing nothing. You see the 0 DTE doing nothing. Do I want to take this? I'll take a stab at it. Maybe a little bit of a double bottom, a little bit of a wick out right here. I don't have to take on that much risk. Maybe I'm right. Maybe I'm wrong. I don't know. You tell me. Looks like it's coming from me. Maybe I was a little bit early today. I was hoping that this recovery was just a double bottom, but it actually looks like it's a lower high. And that's exactly why you protect yourself. I was obviously hoping that this was a double bottom leading to a test back up here, but instead we just got a little bit smoked. I was seeing some I really thought that this is what I wanted to happen, was the delta to keep going up, and yet price got hit anyway. I wanted that delta ramp. Seems like I was a little bit early, and I have a feeling that if I just held on, this one would end up being pretty fine, because we're seeing quite the push there. Like that delta is really, really pushing. I wanted to trade it with minimal risk, and unfortunately, I just got stomped out. I have a feeling that if I risk maybe even this low at 943, I have a sneaky suspicion that I would have been fine, but I just didn't want to take on that much risk because of how much range we have on the day, which is obviously a pretty incredible amount. Like I said, I have a feeling this one's going to come right back. Is it really going to force me back into this? Oh, that's going to be frustrating, but hey, sometimes you just have to trade what the market gives you. VIX is ripping. It is not ripping. The VIX is not ripping. It's always so curious when people come up with stuff like that. The VIX is ripping. Dude, we can see it. The VIX, by definition, is not ripping. People just get so excited by like the littlest movements. The littlest movements. The VIX is ripping. It's like, maybe you're just on like the 1 minute chart. Maybe that's your problem, of like you're just drilled in looking at like the last 2 minutes. Your mom trades the VIX. Dude, my mom has no clue what the VIX is. All right, 5 minute and 10 minute are still a bit bearish. 5 minute and 10 minute. Maybe it was a good cut. Like I said, I got out. I wanted to give it a chance. Basically, I just saw these two lows. I was like, oh, maybe we just double bottom and rip back up. And then as soon as we hit there, I was going to go break even. But obviously, we drifted. And you have to be prepared for that, obviously. Like, without doing an extensive amount of research, you really could develop a pretty simple strategy by just saying, okay, I always know I have a 50-50 shot. Whether you go long or short at any moment in time, you roughly have a 50-50 shot. The market price action is pretty normally distributed. And another fancy way to say that is generically at any moment in time, if you say I'm going to be bullish or bearish, like just right now based on any time frame, you're going to be right between 40 to 60% of the time. Roughly 50%, you're flipping a coin plus or minus 10% based on certain setups. So that's just like how life goes in this game. With that in mind, if you're just assuming that you're going to be right half the time and wrong half the time, the question is, how could you be profitable? Well, you just have to make sure when you're right, you're getting more than when you're losing, when you're wrong. So that comes down to your risk to reward ratio. Obviously, you're attempting to minimize your risk and optimize your reward. So I ask a lot of people this. I'm like, well, what's your trading strategy? And inevitably, 99.99999% of people don't have a trading strategy. They're just always firing from the hip. But one easy workaround is basically making a strategy where you identify key levels, whether it's levels of support, resistance, and you trade there and you say, my strategy is I know I have a 50-50 shot at this key level, but I am net profitable by keeping my risk really small. And then if I could catch the trend, my reward is really big. So that would be a super easy. And then even that, when I ask people their strategies, they never even think to say that because inevitably, just people don't have strategies. They're looking at it and their strategy is like just praying and hoping that like, hey, if I just trade right now, I hope it works. When in reality, you could kind of do that, I suppose, where it's just like, hey, my strategy is I know at any given point, I have a 50-50 shot. So I take that shot and I manage it by keeping my risk absurdly small, like just a recent high or recent low. And then I'm just looking for a trend to either be created or to continue. And you're just looking to get a payout that is more than 2x what you normally lose. So that's the game of when you start to think about it in units of like, okay, like a unit loss, and then a 6-unit gain or something like that. Remember, trading is never an individual trade. And I like showed you that yesterday. You can't be fully tilted on one trade because like you're going to live by the sword, die by the sword. For you to be net profitable in the long run, you're very, very, very much going to want to look at it as like a holistic approach of like, this is my strategy net profitable, because as I feel like I drone on about it, honestly, is you can make money on a bad trade and you can lose money on a good trade. So you can't be putting that much emphasis on one individual trade. What you can be putting emphasis on is the system as a whole, and then following that system as meticulously as you possibly can, and just really having the discipline to stick to what your system is telling you to do. Another very, very common aspect of traders is to get out of their wins way too early and hold on to their losses way too long, when in reality, it should be the opposite. You should be like really, really cutting those losses quick, kind of like I did, where I was like, okay, that's my loss. It hit it. It is what it is. And then when you have a winner, you want to hold it. But a good example of that and how people are is you could even see it in chat. Whenever I get into my trades, people, and it's green, people are like, you got just take your profits. And it's just that drive to take them way too early. And by the time you look at the math of it, the math ain't mathing out. Because if you get out of your wins too early, even with taking reasonable losses, you're net down. And then it even gets way more worse if you hold on to your losses way too long. So please be careful. And it's a common path that a lot of us have to go through. I mean, I went through it. You guys most likely went through it. But speaking in general, that is a very, very common thing you see in the world of retail trading is people will forever hold on to their losses. And then the second they see a little bit of green in their account, they just take it. And so you just got to do your work against that. I don't understand the 50% thing. That goes against trends, right? No. How does it go against trends? You can have a big green bar followed by a small red bar and still be trending up. because of the size. I think the general framework of how people think about the market, what the market is, it's just too basic. It's too rudimentary. I don't feel as if it's ever like truly properly explained or understood the way it should be. But even that, like, yes, the market is 50-50, but if you look at it on a larger time frame, like the daily, the weekly, the monthly, we trend up, and we trend up because when the bulls win, they win with greater size, and they actually have a 4% edge. Depending on the data set you use, you're going to realize that 54% of days are green and 46% of days are red. So there is a slight edge on the daily chart to be bullish, but the difference is the size of these bars. And so not only do the bulls have a 4% edge in any given day, just that like the day itself is going to be bullish. On top, 10 a.m., the market is not liking that. Not only do they have a 4% edge, but then the average win size is greater than the average loss size, which is a lot of the times why you hear sayings like, in the market, bears sound smart, but bulls make money. Yeah, okay. I mean, everyone comes up with their own unique, I guess, reasoning for it, and everyone wants to sound smart and call for doomsday. And I'm so sick and tired of all these doomsday guys, because like they could call for doomsday for 3, 4, 5 years, and then the second there's like a red day, the second there's a 3% pullback in the market, they're like, look it, I was so right. It's like, dude, we pulled back 3% and you were calling for bearishness, you were calling for doomsday, you were calling for a market collapse 50% ago. Like, we're still above the value that you called out, like even with this drop included. And that's such a common thing. You really now see it all over on X, is like all these people who are doomsday calling. Doomsday, doomsday, doomsday. We are so fucked. We are so fucked. And they've been saying it for so long that even in this drop, even not even counting yesterday, before yesterday, when we were bad, we were still above the values that they were calling for doomsday at. And then yet they're like running around as if they're some sort of market genius. Like, dude, it's insane. It's absolutely insane. And it, like, you guys probably read the same Twitter accounts that I do that are doing that. It's like, okay, yeah, you were kind of right. But also when you started saying this, if you took the short at that point, you're still down. Heroes getting hit. Options flow is getting smoked. Yes, the Mag 7 is getting its face kicked in, which makes me wonder, why the fuck did I take a bullish position? I guess I took a bullish position because I was looking at the SPY and I saw this nice bottom here at 943. I saw a nice pump. Even this, the SPY is holding up well. Why we're going down so dramatically is something, either one of these or a combo of these in the Mag 7 is just getting its teeth kicked in right now. And it's pretty brutal. I mean, look at this. Call delta dropping, put delta dropping. The delta is just getting beat the fuck up in the Mag 7, while the SPY is like attempting to hold on. The 0DT is really not moving at all. And you actually saw some bullishness up until 952. I tried to take advantage of this. In fact, I went long here and there was even this pop, and yet price didn't happen at all because the Mag 7 was unfortunately just doing the complete opposite of what I needed it to do. But here we are once again back at this key level of 5,300. I'm curious if we're going to bounce out of it. I have no specialty prediction on do we bounce or break here. All I could tell you is pay attention. We might bounce out of it, and then you have a nice low risk, high reward long entry, because you would be risking whatever the recent low is. So it's baby risk, and if we bounce, we bounce. On the flip side, if we start to crater, you might want to, technically it is chasing because you'd be shorting kind of at the low of the day. And I'm not the biggest fan of that. But if you were able to do it with low risk, this whole game is, can you just keep your risk low? It's always, can you keep your risk low? Can you keep your risk low? And the low risk here would be, if you chase that short, it would just be whatever the recent high is. So in either case, bullish or bearish, it's still that same sentiment of keep your risk low. If your risk is low, you will survive this game. If it is not low, you're going to get your teeth kicked in. And I'm just wondering, is this the low of the day? I don't like trying to pick lows. I'm biased, of course, because I have call position. So am I letting that sway how I should be trading today? I find that sometimes I try to day trade in the same way as my bias when I shouldn't be, when in reality, if I had no swing position, how would I actually be looking at the day? I think that's actually one of my biggest issues as a trader is I try to contort my intraday bias to the same as my swing bias, just because it makes more sense to be all bullish or all bearish, when in reality, sometimes you do get those mixed signals. It is possible to get those mixed signals of, well, intraday is one thing and then swing trading is the other. And if I were to like self-therapize or break down my own psychology as an active trader, that's one thing that I have issues with. So it's just trying to make them the exact same. Basically, I find that I'm always trying to do my day trades in the same direction of my swing trades, where sometimes those are mismatched. Market will go up from here. I just bought a put. Buying a put at the intraday low, that's a bold strategy. Probably not smart. Probably not what you want to be doing. Probably not the best way. The market for smoked sausage just went up. Jesus, that's aggressive. I just want to make 1,500 off this trade. That's it. Is that too much to ask for? Honestly, not really. I mean, we can move 75 points like it's just nothing in these markets. So in most days, I would say no. Matt, are you bullish or bearish in the medium term? Bullish in the medium term. Long term, I'm always bullish. If we're talking about years out, it pays to be a bull. Your long-term thesis of the market should always be bullish, and it should never deviate from that. What should deviate is your medium term, and then your short term can literally update from day to day based on that, whatever's happening that day. But as of right now, my medium term is bullish, and my reasoning for that is the uncertainty of the trade war has calmed down quite a bit. We're seeing positive news with Russia and the U.S., we are seeing seasonally it's bullish. We're seeing a little bit of constructive behavior in the options market. Granted, not a lot, but if it keeps trending that way, basically, I think in the medium term, the bearishness is overplayed. But I think it is a difficult thing to predict because it's going to have so much to do with the developments in the trade war. Like basically, are countries going to come to the table and are we going to hear positive news from it? Like, nope, trade deal struck. We're looking good. We're looking awesome. Let's rip it. Or is it going to go the other way where it's going to be hostile? And that is unfortunately something that we cannot garner from looking at technicals or indicators or options flow. It's kind of just a binary event of just what's the news going to be. So when you have stuff that is just so dependent on news, you're kind of flipping a quarter. So coming back to my 50-50 example, yeah, you can still be net profitable if you control your risk. This entire game, whether you're investing, swing trading, day trading, a lot of the times it's going to come back down to 50-50 bets. Not all the time. There are times that you could have edges for sure. But I'm just saying a lot of the time, like generally at any given moment, you could say, yeah, it's about 50-50 right now. So the way you could be successful in that environment is by just control your risk, control your risk, control your risk. That's the name of the game. It's the name of the game. Are we putting it in a higher low? So we broke down. So we almost broke out of the 15-minute orbital. That is the horizontal blue lines on the SPY and the Qs. That basically is the high and the low of the first 15 minutes of the trading session. Right here at 10:01, we did break down. The Qs came up and tried to retest getting back into the range, got smacked. The SPY did, and it's really battling doesn't want to stay below or get in. But once again, this block that I have is just the 15-minute range. And if it doesn't, I mean, it looked like it was about to get hit, but this might be a higher low. Could be interesting if we take out these recent highs at 530 and at 452. We might just be pushing back up. And then I do know the stats from Edgeful. Check this out. Talking about stats, facts, and figures, let me zoom in so you can see this. Opening range breakout. We're going to do it on the SPY. This is how, so right here. There's a 50-50 shot of a double break. So right here, I am looking at 9:30 to 9:45. I am looking at the 15-minute orbo, the 15-minute, which we already have, from 9:30 to 9:45. There is a pretty much an, what time frame? I'm on the past 6 months. Let's go to the past 2 years. Check. I'm going to give you the exact stats. There is a 62% chance, a 2 in 3 chance that when you break one side of the orbo, you're going to also break the other side. So what that means in real time is, all right, we already broke down. right now in real time, I can tell you there is a 2 1/3 chance, not exactly, there's a 62% chance that at some point today we take out 533.50, which is this opening side. So is it a guarantee? No, but it is a better odds than not that we break this side today. Now, will we keep going? No, that's not what I'm saying at all. Of course we can. I'm just telling you it's an if-then statement. It's a conditional probability. It's a Bayesian probability. If we are in this situation, then here are the odds of that. So if we are in the situation of breaking one of these, you then have a 62% chance of breaking the other side. So is it a guarantee? No, because there's obviously a 38% chance that we don't, and we just keep trending. That's totally possible. And that's actually in line with some of the other facts that we know about trends, where if a trend is created, you generally just keep trending, and they're not that common, but when you can catch on to one, it really just keeps going. So right there. And that's specific to the SPY. I'm looking at the SPY breakdown, yes, breakout, no. So this would switch over to a yes the second we take out 533.50, if that happens today. But right here, we try to get back into the Orbo range. And thus far, both are getting smoked. And it just seems to, like the SPY, I was going to say the SPY was looking good, but it actually literally within the past couple seconds took a pretty sizable hit right there. But what's going on? The bearish culprit of the day is the Mag 7. The Mag 7 is just getting fucking dumped on right now. Calls down, puts down, like it's just getting hit. So I'm obviously hoping for a reversal because it would be cool to see these odds played out. Right here, we already broke down on both the SPY and the Qs. I'm looking at the SPY. If you want the odds on the Qs here, I'll just give it to you right now. The odds, the past 2 years, come on, load, 52% chance that the Qs break it. So I looked at the SPY and the Qs, but you could do it on any of these. Like, let's just say you love trading, I don't know, what do you guys like trading? Tesla? Same thing. You could just run the exact same odds for it. So Tesla doesn't commonly. It's more likely than not that you don't touch the other side on Tesla. So just kind of cool facts like that. And even there, to see the difference between SPY, Qs, and Tesla, it shows you that certain assets don't trade the same. They have different, aspects, different nuances, and you kind of want to become an expert at the thing that you are trading. So let's go back to the SPY for now, just to keep this up, to see if this is or isn't going to play out throughout the day. I hope it does, just because it would be kind of a cool real life example, real time example, real life, real time, but doesn't look like it's breaking that way. Jesus. So we were pretty much choppy up until 10:01. We had similar highs, similar lows, and then at 10:01, we officially broke down. So we made a fresh low. Same thing. Pretty much the same high on the Qs, pretty much the same low. And then I would say the trend became a little bit more apparent somewhere between 10 and 10:01, where we made that fresh low. So now we're at the point of having lower highs and lower lows. So price structure is bearish on an intraday perspective. I'm just literally talking about from 9:30 till now. I'm not talking about on a larger time frame. Lower highs, lower lows. Looking at price momentum, the 5-minute, the 10-minute are bearish, and the 30-minute is actually testing right now if it wants to break down or not. Looking at the Nasdaq, the 5-minute and the 10-minute are bearish. Same thing on the 30-minute. It's questioning if it actually wants to break down. So if this sell-off continues, I would say that it's a bit more bearish. But on the flip side, we might rally right back out of this, which would be interesting as a recapture. So I'm going to set an alert up because once again, the things that I've studied, these breakdowns and recoveries are actually, that would be a nice bullish signal. I forget the odds of that one off the top of my head, but I know that's a positive trading strategy, mainly because you could catch a nice trend with minimal risk. The accuracy isn't that high, but the profit factor is above 1, which is what you need for a positive return. So anyway, I'm setting up an alert to whatever this recent high is, because if this is a fake out breakdown and the 30-minute can start to push back up here, basically the high, whatever high that would be, right at 10. So right now, the bears are in control, but as we have seen over the past how many ever trading sessions, this stuff can change on a dime. Obviously, I wish at some point in this breakdown, I just took that short, because my futures accounts would not only not be red, but they would be nicely green right now. But as I was alluding to before, I think one of my biggest issues currently as a trader, and the longer you trade, you're going to realize you kind of have different chapters of what your biggest issues are. Currently, my biggest chapter right now is psychologically, consciously and subconsciously. I'm always trying to day trade in the way of my swing trades. And I think sometimes that does cloud one of the other. Like I look at my day trades and I'm like, oh, okay, my swing trades should be that way. And then vice versa. For whatever reason, and maybe not for whatever reason, I think that's actually a difficult thing to do, is to be okay with two different time durations going in opposite directions. It's hard to stomach, but I do wish I were better at that. So there's a good chance that clouded part of my judgment today, because obviously my swing positions are long. So I was trying to force maybe something to be there that wasn't there. Now, to be fair, obviously we did see quite a bit of a pump and a pullback. I called out that perfect trade to you of like a pop, a pullback, and then a continuation. I tried to go long right there, and the S&P 500 options were suggesting it. It just broke down. So like, I'm not really beating myself up that bad about that particular trade. It wasn't like completely horrific, but it definitely wasn't an A+ setup for sure. I think we could all agree that was more of like a I don't know, B- C+ type of setup. So I wonder, I mean, I'm curious if we're going to take out what high do we have? The 10 a.m. high is what I'm looking for this to take out. If we can take out the 10 a.m. high, I think maybe momentum shifting right here, literally at 10 a.m., whatever that high is. Let me mark it out right there. So on the SPY, it's 530.14. On the Qs, it is 451.62. If we take that out, it would potentially shift to change of structure. As of right now, the structure is lower highs and lower lows. If we take that out, that's a fresh high. So that might mean if we can put in a higher low, that structure on the day has changed. So that's why I'm watching 451.62 on the Qs and 430.14 on the SPY. And if you are looking at and we might just be, honestly, the market might just be defending 5,300. It's a key option open interest level. It's a key psychological level. It bounced, try to bounce it again. We got a deeper pullback. The fact that it's going down deeper each time is kind of suggesting more bearishness, but let's see. I mean, if they can pump it out and if they can recapture this low that we saw at power hour yesterday, literally, I know that you're seeing red here and you're freaking out. I just want to clarify, 5,315, this level, slightly above us, that's where we were at power hour yesterday. So the idea that like, oh my God, this bullish push is completely over. Folks, we were here at power hour yesterday. This was the power hour low, and we just happened to get like an over exuberant push in power hour. So this level, like, let's take a step back and kind of realize like where we're at, and the fact that, yeah, are we down a little bit, but we're down relative to a gigantic pop yesterday. So if we can recapture that, we're literally above where we were at power hour, which is why I'm kind of watching that level intently. And it also happens to be roughly aligned with a key psychological level and a key open interest level. So I care about whatever this 10 is. So that's 15, the breakout's at 16. So this is the zone I care about. If we can get back above it, I think the bulls have a fighting chance. The longer we stay below it, I think the bears have a fighting chance. So this is the range that I'm kind of indecisive at. Above it, if we get pushing here, sick. If we're pushing here, bears in control. Bulls in control, bears in control. Or no. Bears are in control and bulls gain control from an options perspective all the way up here. In terms of a fighting chance, the bulls have a fighting chance if they can get above this. Well, I think the bearishness is going to get more severe if we hold below where we currently are, is probably a better way to express that. Let me go to the 3 minute. Let's go to the 3 minute. Let's go to the 3 minute. Let's go to the 3 minute. All right. Let me show you the options flow for right now. S&P 500 potentially bottoming at 1012, trying to pick up, but I do want to point out how the all expiration is very different than the 0DT. There's not much action going on the 0DT for the S&P 500, but we are seeing a pretty nice pump in the all expiration. Looking at the Mag 7, We're seeing a low being put in at 10.12, and then the question is this a dead cat bounce and the delta is going to take it out with price, or is that the low of the day and we actually somehow have like a crazy V-shaped reversal? But right now, the Mag 7, this delta flow, like clearly top left, bottom right type of stuff, like that is clearly bearish, and so is price. S&P 500 is telling a slightly different story because the all expiration delta is actually not that far away from the intraday high. So this is what, the 19th gazillionth day in the row where we're seeing a differential between what the SPY is telling us and what the Mag 7 is telling us, which is inherently reflective of how the market is just confused. It doesn't, if you think about it, it doesn't really make sense that the Mag 7 and the S&P 500 would be telling you two completely different things, because the Mag 7 is effectively the most influential part of the S&P 500. So for those to be telling two different stories, it just tells you that the situation is like the market just doesn't know what it wants to do. Part of it's bearish, part of it's bullish. I'm looking for this play, this reversal play out of here. But I'm not just going to be shooting from the hip. I'm going to be ideally patient and waiting for what I would love to see is this high of the current 30-minute bar, which will be closing in 9 minutes. I want to see that taken out on both ES and NQ. And very importantly, I would love to see the options market showing a little bit of bullish enthusiasm. The SPY is looking fine. Mag 7 not looking so fine. We have a lethargic bounce that is now just going sideways. Lethargic bounce. But on the flip side, lethargic bounce and price structure is bearish, but we're also not breaking down. At least as of now, we are just seemingly, we're in that danger territory of a potential breakdown. And not only do we hit this bearish target number 1 very early, we then later at 10:01 hit bearish target number 2. But as of now, like it's trying to push it, but not, I mean, at least as of 10:21, we're not really getting that follow through. So time will tell. Time will tell. Well, literally what's going on? Literally, speak of the devil, a pump. A pump in SPY, but not options. A little bit of life here in the Mag 7 right there. Is something being announced? The old 1021 announcement? Why are we going up right now? Why are we going up? Why are we going up? Trump says inflation is down. That was 39 minutes ago. Uh, 5 minute and 10 minute are bearish. 5 minute and 10 minute are bearish. 30 minutes trying to hold on. 30 minute is trying to tell us that there's a big battle happening right now. I'm seeing a bit of a pump. I'm seeing NVIDIA show life. I'm seeing Tesla go flat. I'm seeing VIX rise. All right, so the SPY is back at the bottom of its 15-minute Orbo, and the Qs just got smacked at the bottom of its 15-minute Orbo. I am coming back to Edgeville. I'm looking for that 62% probability to play out today. I would love for it to play out today. Is it a guarantee? No, I'm telling you there's a 62% chance. I'm giving you the exact odds of it happening. And when I say the exact odds of it happening, the it would be us trading back up to 533.50. That would be the it in this situation.
Order submitted.
Well, folks, the die is flying in the air. Let's see if we're going to hit lucky snake eyes today, but we're ripping it now. We're hoping that this breakout's going to go and we're going to lead us to the promised land, but well-defined profit, well-defined risk. As I said, show me the cards, dealer. I want to know if you gave me a face card. I want to know if you gave me a lucky ace. A monkey. All right, we're going to let that one cook for a little bit. We're going to let that one cook. So we took out that high that I called out to you, this 10 a.m. high, which happens to be, I hope not rejected. I hope I'm not getting caught up in a dead cat bounce. I'm playing a game here, a game that I'm not necessarily the biggest fan of. If it works out, I'll look like a genius picking the bottom. And if it doesn't work out, you guys are going to say, why the fuck were you going long when we were trending down? You live by the sword, you die by the sword. But I'm hoping there's a little bit of, a little bit of a pump in the Mag 7. I'm trying to play this upswing. There's a little bit of there's a lot of bit of a pump in the S&P 500. So I'm trying to play this flow. I would love for the 5-minute and the 10-minute to get green, but I'm really playing the fact that the 30 minutes attempting to fight. I hope that this is the low and we just bounce right out of it. Am I early? Yeah, but I kind of have to be early because the ranges are so big that the time I wait for it to be evident, i.e. the 5-minute and the 10-minute going green, I can't take that risk anymore because it's too far of a range. So basically, to minimize my risk, I have to also minimize my accuracy on the trade, which is just descriptive of the current environment we're in. But like I told you, if we take this out, it's a potential structure change. We had lower highs and lower lows. You could see that with the green and the red. If you want this indicator, it's called fractals. It is free. But the green and the red, whatever time frame you're on, it shows you the recent highs and the recent lows. So it's a very easy visual tool to see lower highs and lower lows. And then all of a sudden, you start to see, hey man, that might be a higher low. Well, hey, the fact that we just broke out of this high means we have a higher high. So the question is, are we getting an actual trend change? And obviously to see it, you'll first see it on the smaller time frames, and then it becomes more apparent on the larger. But once again, as you wait and wait and wait, you're going to increase your accuracy, as in like, okay, the trend's actually changing. But the trade-off there is you're then taking on more risk. So the longer you wait, the more sure you can be. But then by the time that you're sure, you're going to have to take on more risk to do the trade. So that is kind of a personal thing of like, well, where are you at? How do you want to do it? How do you not want to do it? And I could tell you that I am I'm almost back to break even. I do have one trade of the day. I'm down $1,000 locked in, but I currently have a live trade that's up about $750. So my net situation is down about $250. I'm up about 35 points right now. Winner, winner, chicken dinner, show me those cards. Show me those cards. And I just want this to go. By the time we are at 700, by the time we take out what level, I need to decide the level that I will be moving my stop to break even and do a free ride. It'll be 50. 18,750. If we can hit that, I'm going to be moving my stop to break even, and then I have a free lotto ride. Right there. If we can take that level out, I'll be up about 60 points, technically 59. And then on that event, if we can push that, I will be moving my stop to break even, and then I have a free lottery ticket. And that's my favorite way to trade because, hey, free lottery ticket. Why would you not? If someone gives you a free scratcher, there's no loss to you, man. So right now, obviously, I have quite a bit of risk on the trade because this is my stop and that's where I'm in. But the second that hits, technically 50. Should I make it 58? I'm kind of looking at this high. I'm looking at a level where if we take it out, like I have a reasonable chance of riding whatever this trend is, because really this is coming back to the edgeful play of we have a 62% chance of going all the way back up here at some point today. I'm not saying it has to happen right now. It might happen later this afternoon. It might happen in power hour. It might not happen at all. But at some point today, at some point in this trading session, there is a 62% chance of us going up here. 62%. So if you can get into a low risk, high reward situation where then you also have a 62% chance of it playing out, well, that's actually pretty freaking phenomenal because you're no longer doing the 50-50 flip of a quarter. You're doing like kind of a weird weighted die type of a bet, or you're betting on, instead of 3 out of the 6 die faces, you're betting on 4 of the 6. And then also, if you have better than not odds and your payout's better than your risk, well, now you're really cooking. Now you're really, really cooking. All right, let's mark out. So we got a pump, could be a fake pump. I mean, for a little bit there, it was supported by the flow in S&P 500. Here's a look at the Mag 7. The Mag 7 trying to bounce since 1012. A little bit of a give back in price and also in options. Here's a look at the S&P 500. Same thing. We got a really nice pump and then right around 1027. Little bit of a hit. So I'm hoping that this is just like a momentary pullback, but I like that I'm seeing calls being purchased, puts are being closed out. I'm just hoping that that trend continues. With respect to the Mag 7, basically all of the delta lines are slightly trending up since 1013. So the options market was clearly bearish, and then it kind of went flat, and we're now seeing, is there actually going to be a bit of optimism? And do I definitively know? I have no idea, because it's depending on people who are about to trade. Are the people who are about to trade, are they optimistic or are they negative? I don't know. I don't know. And before, look at that. And before you know it, I'm already back in the red. Fuck. Well, I definitely don't want this to get out of hand, because I need these accounts to be alive tonight so I can actually request this payout. So do I want to actually take this current risk, or do I just want to cut it and call it a day and lock in a loss? And then even with the loss, I could still just request the accounts. I would much prefer that we just put in a higher low and pop off of it, because what would be nice is, instead of using this low or this low as my risk, if we pop and take out this recent high, I can then move my risk all the way up to this recent wick. And once again, this game is about minimizing your risk. Your profits and your runners will take care of themselves as long as you're not getting in the way of them, which is commonly a thing that people do. Your job is just the risk manager. So obviously I'm risking this recent low. On this push, there is a decent argument I probably should be moving my risk up here. Honestly, it's not that much more. It's 20 more points. So I guess I could theoretically do it. But what I would want to do is, I'm targeting this 1030 low, where if we can push and make a fresh high here, boom, I could cut 2/3 of my risk like off right away. So I'm really looking for this pump to take out 742. And then instead of risking 18,567, I can move my risk all the way up to 636, which is like a huge difference, like a 70-point difference. That's 1.4K risk taken off the table. As you're continually taking risks, like, that's where you know you're in a good spot. That's when you know you're in a good spot. Which is a real bummer, is if I got out perfectly at that high, I would have been break even on the day. I did not expect this type of a swing. Part of me almost wants to move my risk up there right now, just because I'm already in a like bad position. Come on. All right. So risk reduced by about 70 points. I just moved my stop up from 568 to 636, taking about 70 points of risk off the table. I did it a little bit early, but I like that momentum. I thought we were going to come up and test. If this ends up just whipsawing right back, I guess it's just not my day. I guess it's just not my day if that were to happen. But come on, take it out, because my system would call for it to be there anyway. If we take it out, I move. Okay, we took it out. So yeah, I front ran my system a little bit, my risk management system, but whatever. I was just a couple seconds early. So really looking for it to take out 50. On the current structure, I don't know if I can now use my break even, because if anything, these swings are starting to pick up. Don't do that. Just break out and rip. I haven't had an easy trade in so long. Like, I feel like it's been, in terms of these future scalp trades, day trades, whatever you want to call them, it honestly feels like it's been over a week since I've had that trade where I get in, I take almost no smoke, no heat, and it just goes and goes and hits my target, and then that's it. I feel like every single trade recently, because of vol and just how big these ranges are, and just the fact that ATR is like through the roof, I just haven't had that like beautiful, like simple, easy trade in quite a while. It just hasn't been there for me. It's just every single trade I feel like I have to take serious heat on, and even then, it's not necessarily turn. Oh, Nvidia's really turning. Tesla's flat. Nvidia's turning. MicroStrategy's pumping a little bit. Palantir's turning. Nvidia's looking good. Broadcom's okay. So Nvidia is seemingly leading the charge back up, while the other ones are looking a bit green. Did we make a fresh high? All right, almost. We almost took out 50. Come on, just go. Just give me that easy trade. I already had to take this smoke of fucking Jesus, 60 points. I didn't even know that I had to take that much heat. If I were to get out right now, it'd be roughly break even. This is my second trade of the day. If you guys are joining in, I'm trading one NASDAQ contract on the futures market, but I'm doing it on 20 different accounts. I'm copy trading. I'm trading one account, and the trade gets propagated to 19 additional accounts. This is my second trade of the day. My first trade of the day, I took a 50-point hit, lost $1,000. 50 points in the on the NQ futures contract is worth $1,000. And about 40 points is the Qs moving $1, just to give you an idea. So if the Qs go up or down by roughly $1, the NQ futures contract is going to be about 40 points, and 50 points, a little bit more than that, is the $1,000. So anyway, I locked in a loss of about 50 points. As you can see, I'm up roughly 50 points right now, which is why my current trade's up 1,000, my realized loss is 1,000, and the net situation is roughly green. But it looks like we got a bit of a pop there. All right. It feels like I should not be risking anything right now, especially because I need to request money out today. So I just moved my stop to break even. It's a little early just based on the ATR. This could easily come down and wick me out. But the fact that I already have a losing trade on the day, and the fact that I need to request out from Apex today, and I very much don't want to blow out, and I just want to get the request in, which, to clarify, the payout request is going to get denied, but I just want to restart the next cycle. So if this wicks me out, I can live with $1,000 loss on the day. And if it keeps going, great. I have the opportunity to actually be green on the day. Some of it's going to be luck. Once again, you have to know what's in your control and what's out of your control. What's in my control currently is my risk management. What's out of my control is what the next bar is going to be. So I'm doing what I can, and I'm picking a reasonable way to control my risk, and I'm controlling my risk by taking all risk off the table. Granted, you could argue it's a bit early, and that's probably fair, but I just want to get this request in. And we'll see. We'll see. 7, 8, 9, 2. I would love for us to go up there. So, okay, now that we're having a good conversation about risk management, which is always good to have, let's talk about the odds of the strategy itself. The odds of the strategy itself was, I know I have about a 12% edge. And once again, that's coming back to Edgeful, and you guys could do this. If you want it, you could get a free trial of this. It was in the Tuesday show. There's the link there. But anyway, looking at the opening range breakout odds, coming over to SPY, looking at the past 2 years worth of data, we broke down the first 15-minute bar. We broke down below the low. The odds of us breaking above the high at some point today are 62.2%. That's a 12.2% edge. So generally in the market, your odds of the next bar going in your favor against you are 50-50. In this particular circumstance, all I can tell you is, I'm not saying right now, maybe it's this afternoon, maybe it's during lunch, maybe it's in power, I don't know. But at some point today, the odds of us taking out that first 15-minute high are 62%. So it is more likely than not that we take out that high. Now, is it extraordinary odds? No, I'm not telling you it's 70, 80%. I'm not telling you that at all. But I am telling you it is more likely than not that as soon as we broke this low, that we at some point throughout the trading session break the high. If we're at that point of breaking that high, I know the SPY and the Qs are highly correlated. And then if they're highly correlated, I could play this pump all the way back up and get my account in the green. Speaking of which, my current trade is up about 1,700 roughly, and my net situation on the day because of that losing trade is going to be $1,000 less because I have a loss. But that pump was nice, and then all of a sudden it's just giving me this pump back. What the fuck, dude? Just keep going, man. Make my life easy. Make my life. No. Don't do that. No. We talked about this. Man. Don't do this falling stuff. No. Yeah, no red. No red. No, if this quickly pukes and knocks me out when I could have got out for break even on the day, I'm going to be punching the air. Your boy's going to be punching the air. All right, let's mark out fresh highs. I would love to hear that. And then, so these blue lines, that's that 15-minute Orbo. Of course, you could do the 30-minute Orbo. You could do whatever you want. But I'm just telling you that this line and this line, that's the first 15-minute high and the first 15-minute low, first 15-minute high, first 15-minute low. We broke to the downside right around 10. And we know, at least for the SPY, there's about a 62% chance that at some point today, we touch 533.50, which is that first 15-minute high. And it also obviously happens to be the high of the day as of right now. NVIDIA, I'm seeing a lot of strength there on NVIDIA. How's Broadcom looking? Broadcom trying to, NVIDIA as of now is having the most impressive intraday recovery. What else do we have going on? NVIDIA, Palantir is looking good. Tesla's trying to pick up. Broadcom's trying to pick up. Meta's trying to pick up. Apple's trying to pick up. Microsoft's not picking up. Netflix is picking up. Rum's picking up. Coin's picking up. ASML, not much. Amazon's picking up. Okay, we got some interesting moves for sure. We got some interesting moves. Microsoft looking kind of uniquely weak here. Oh, here's the question. Are we actually going to get going, or are we just putting in a painful lower high that like we snap this trend line and actually puke? Your guess is as good as mine. All I can tell you is I am taking on no risk. If there is a random puke, I'm not going to lose money because my stop's at break even. And in all reality, if we take out this current push high, I actually might move my stop up to here because that would mean 8 to 30. So that would, if it hits it, I'd still be on the red on the day, but it would really, really mitigate it. Because remember, I need about 50 points to mitigate my current loss, about 50 points. Here's the situation right there. So this is my realized loss. This is my unrealized gain. And this is my net situation. So the column that matters the most is the one all the way to the right, because that's where you are at net on the situation. And net matters way more than your realized and your unrealized. What exclusively matters is your total. So for my total to be green, I need to be more than 50 points in the money, which you can see 50 points right here is about, I'm currently up $1,400. For those of you on Ninja, you might not know this, but you could switch it around to see how many ticks you're up, to see how much dollar value you're up, to see how much percent you're up, to see, I don't even know what that is. That might be ticks. And then here's your points. So I like to just trade in points right now in this environment because I find sometimes looking at the dollar value like fucks with my head. So I am really tempted to move my stop up because if that is hit, then my net loss on the day is only $400, which is super manageable. Or I could just get out right now for a net gain of 1,000 and just call it a day and move on with my life. But I don't want to do that because I know the odds are on my side. I know we have better chances than not of going all the way up here. I know we have better than chances than not of going all the way up here. So it kind of feels like why kneecap myself where finally, if you catch the right trend, do you necessarily want to get out of the trend early? But then if you do that, you're risking what if we're in the other bucket of the day where we're just not getting it. I'm seeing the Mag 7 climb up ever since 10-12. Obviously a bearish trend to start the day, then it kind of settled, then there was an extra puke, then at 10-13, 10-12, clearly the linear regression there popped to the upside. Looking at the S&P 500, same thing. It showed some strength, well, it showed weakness up till 944, huge amount of trading hit at 943, 944, pop, a little bit lethargic, and then right around, once again, 10, 12, 10, 13. That's when you saw the all expiration delta really pick up. And then the 0 DTE started to pick up around 1030, but it's going flat right now. What I really like is the fact that we're honoring this support. They try to break down the power hour low. They try to break down this open interest level. I'm telling you, if we get going, the next level is all the way up here, 5,400. So for those of you caring about the open interest levels, that's the watch point all the way. That's my bullish target number one. If you're a scalp trader, you might want to just watch the intraday high. That would be like, if you're like, dude, I need to go to work or something. Yeah, you might want to just watch 5,350, which is the intraday high. But for those of you who have a bit more time, a bit more patience, and are willing to be in the trade for a bit longer, if we are showing momentum, if we can take out 5,350 and hold that intraday high, if we hold above it, my next target's all the way up here at 5,400. And I'm getting that target from the open interest, for sure. We're almost broke out there, and now we're kind of getting smoked a little. We were looking real good for a second, and now we're kind of, oh shit, is it going to come from me? I really, like, literally seconds ago, not long ago, we're talking about 10:43, a mere minute ago, I was looking smart, and fast forward 1 minute, and now I'm looking dumb. I'm praying that either this support or this support can hold, because if it just flushes me out, it's going to be a break-even trade. Oh, okay. Do I just take it now and I could take a small loss on the day, or do I wonder if it's coming for me? Yeah, it's dipping. Fuck. maybe it's going to get saved at 700, a key, just like key psychological value people might play off of. I'm really tempted to just get out of this and cut my loss down to 300 because you can make 300 back in like a sneeze in the market. But that's more of, do I think this dagger is going to continue? Do I want to get out, or is it going to pull itself out of this? Is it going to pull? Come on, just you turn it out, brother. Just like rock it right here. Man, the fact that this could change so quickly in 2 minutes, I was up 1,000 to now being down 400 net in literally less than 2 minutes. That's how like insane this market is right now with these ranges. I mean, we just dropped so many points like it's nothing. You have to have a pretty hardcore stomach to handle these swings. Come on, just break out. Break out. We are below VWAP, so I'm trading on the wrong side of VWAP. I didn't realize that, and I don't like that. We try to get going. Is it coming for me? Come on. Bounce off of 700. Bounce off of it. It's a nice value. Don't crater. Just take out this recent high and continue your trip to the upside. Come on. Let's see. Are the bulls going to show up at 700? Dude, they are testing it. Like, this is painful. I really wanted to be done on the day. I wanted this trade to work. I really, really did. Shit. Save it. Save it. Bulls, step in. Step in. Save it. Save it. Save it. No, keep going. Keep going. Save it. Just God candle. God candle. Bounce it out. Bounce it out. Go, 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 go. I like that it took out this high. No, don't swing back. Don't swing back. Come on, keep going. Keep going. Can he do it again? Can he save it again? No, go. Other way. Green, green, green. Monkey, monkey, monkey. Save it. Save it. Dude, we're playing with fire right now. We're playing with fire right now. Go. Go. That's what I want to see. Take out this range. Break out of this range to the upside. Look how close that was. My stop was at 92. It hit 92.75. It was within a point of knocking me out. Within a point. No. 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 Get away. Get away. Get away from me. Get away. Get away. Get the fuck away from me. Get away. Get away. Get away from me. Go. Leave me alone. Get fuck.
Order canceled.
All right. Well, break even trade. Fuck, man. And now it's probably going to go, knowing my luck. Now it's probably going to go. Well, just in case there's a sell-off, you got to protect yourself. I don't mind it. In reality, you have to get used to it because most of my trades end up becoming break-even trades like that, generally because I am like aggressively moving my stop. So you kind of, and look at, yeah, it just started to turn. I was trying to play this up and hoping that it would keep trending, but instead it didn't keep trending. We're getting that dip. And hey, if it picks back up, I might have another fighting shot, but even this, you see the SPY, even that is kind of trending down now. So you just never know. Like this could lead to a legit trend line snap and a puke, and I just don't want to be involved in that. So I'd rather get out, like just break even on it than anything else. But I mean, this actually might lead to a real trending up. This isn't looking so good. I mean, I'm seeing potentially a legit trend line breakdown here. I mean, I know there's support at 5,300, so maybe we bounce off of it. But on the fact that there's a chance like this could break and keep going, like, of course I can't be in the play. So right there, had I not gotten out at my break even, I was up here. I'd be down another, 30 points or something. And Of course, if it recovers, you're like, well, why didn't I just hold it? But you don't know. Like, what if it doesn't recover? What if it just pukes and pukes and pukes and pukes? So like, I think whenever we play that game, woulda, coulda, shoulda, we look at it through a light of if you play it perfectly, as if you knew what was going to happen. And the point is you don't. You kind of have to, when you're playing that game of woulda, coulda, shoulda, like, okay, right here, the question of should I have gotten out there, yes or no? And once again, this was a break-even trade. I did not lose any money on this trade. Okay, it knocks me out. Yes, woulda, coulda, shoulda. What if the market did pop? What if there's a giant, it knocks you out and then it just rips and rips and rips? Okay, there's that chance and maybe you're going to miss out on it. But if you're playing the game of woulda, coulda, shoulda, what if the very next bar is horrifically red and you blow out your accounts and you lose all of your accounts? If you play that game of woulda, coulda, shoulda enough, you're going to find that bad beat scenario if you're always taking on an excessive amount of risk. Because if you're taking on the excessive amount of risk, that's the scenario in which you could actually like blow out. Maybe we have a little bit of a double bottom right here. We have this low that at one point I was risking it through, and right here, if I was holding it, I'd be sweating for sure. And I'd be praying, go, go, go. But no harm, no foul. I had a lottery ticket. It didn't pay. So I'm down basically 1 unit on the day. The second trade was scratch, so it didn't matter. And ideally, with ranges like this, if you can get on the right side of the proper move, you can make a multi-unit return. So you don't have to worry about a unit hit here, a unit hit there, because the right trade can return 5, 6, 7, 8 units. So it's all coming back to the risk management of it. I wanted you to win there. Yeah, me too. Me too. I wanted it. Are we going to double bottom bounce out of this? There might be this bounce opportunity at 5,300. I don't like that it snapped that trend line. It might be a little fake out. I'd be watching to see if we can get back up. Once again, if we hold above 5,300, 16, 17, that's strong. Obviously, we need to hold 5,300. What's going on with the options flow? Mag 7, why we're going down right now is we're seeing options get beat up right here. 0 DTE SPY got beat up. SPY drifted down. But the overall SPY trend is up. The overall SPY trend is up. I might try to pull off a dip buy here if I can. Probably shouldn't. I don't know. Am I forcing a trade that's there? See here how the S&P 500 tried to get going. That was what I tried to play, and then it quickly got smacked right below. Same thing with the NASDAQ. I tried to play this recovery on the 30-minute, like right here, and also simultaneously play this push up. But we got halfway through this range, and now we're just kind of getting this breakdown. We're just kind of getting this breakdown. Man, that was a nice push for a bit there on NVIDIA. Like, I wonder if we're just putting it in a higher low, and we're just going to pop here, like... Is that what the play is? Or is the trend line snap actually going to cause this vomit? I don't think you could be certain either way. I think you just have to have the patience to wait. The patience to wait. And we'll wait for it. We'll see if we can spot a good opportunity. All right, we definitely don't need that. Yeah, just kind of looking at this mess. Lower highs, higher lows that were broken, and then we quickly puked to this key level. Obviously, taking that breakdown, that was a legitimately good trade, especially if you saw options. You had to be quick to take advantage of this one, but if you saw options breaking down on that trend line breakdown, that was a legitimately good trade. Legitimately good trade. So we'll see. Here's the intraday low on SPX is 5,282, 83, something like that. And it looks like even this is kind of going a bit bearish on the 30-minute. We are bearish, and this is bearish. Should I be switching teams right now? If I switch teams, that's a 60-point risk if I'm wrong. That's $1,200, which would bring my daily loss to just over 200 if I'm wrong. If. Obviously, I'm eyeing up this recent high right here, just below 700. If we pump and take that out, that would invalidate it, I suppose. Oh, it's tough. I would say that the shorter term, well, literally, you guys saw how quickly that was, where I was up 1,000, and then a minute later I was back at break even, and then a minute after that I was down 1,000. So in 2 minutes I went from up $1,000 to down $1,000, and it just all happened that quickly, from literally 9:42 to I guess it was a little bit more. It was 5 minutes is how long it took, but really it could have wicked me out even before that. We're right on that edge of, is it bullish or bearish? I can't even say, because like right here, there is an argument, trend line breakdown out of the consolidation zone. Okay, we did puke. That's bearish. But on the flip side, we just came to support. And what if we bounce off support again the way we already have? And then looking at the Mag 7, that one's not looking so good. But now even the SPY is picking up. Look at this. The SPY is starting to show some life. So is that trend going to continue, or is it going to just get smacked? And then looking at the Mag 7, we started to show a bit of life, and then something changed right when the market went against me. You could see I was riding this trend, and then it just got smoked. It just got smoked. And now it's attempting to stabilize. Like, as a short-term trader, you could say that price structure and momentum is favoring the bears. But looking at the options flow, it's kind of saying that the market, if anything, is indecisive. Doesn't quite know what it wants to do. It's like we're literally just hanging, like even this right here. This bar closes in 22 seconds. Like, is this a little double top breakdown? Like, should we be shorting this? How much is that risk? Man, these ranges, we just moved so much so quickly. So much so quickly. All right, let me look at that. Very easy to contort the market and see what you want to see in this circumstance. Very easy. So the SPY delta is looking fine. The Mag 7 delta is looking atrocious. So they're completely opposite of each other. I think this is just going to end up being a painful trade for everyone involved. A painful trade for all involved. What time is it? It's 10:56. 10:56.
Order submitted.
All right. I'm trying to now play the other side, just if there's some weird puke below 300. I was trying to see right here at 10:55. It looked like maybe it was saving it, and then we got smacked and took out this the recent low. So I'm trying to play this as a puke to the intraday low, and we're going to see how that's going. That's kind of the setup. Is we have this well-defined risk. We're potentially breaking down at a key level, and the major play is literally just playing it exclusively to the intraday low. Which on the SPY would be 526.34, and on the Qs it would be 448.27. So I'm basically seeing the snap of the 1027 low. We're not holding that low, and then really drilling in. I wanted to see if it would quickly recover. It didn't, and then we turned. So I'm just basically, the trade is this. I'm just looking for a little bit of a fall down here. The options market is kind of giving mixed signals. Actually, the SPY just took a hit. I was saying I saw this bounce and I was like, oh, that's a bit bullish, but okay, that should help me. And then the Mag 7 is clearly just trending right back down to that low. But we're going to see. We're going to see. What? I'm only up 2 points and the SPY is getting hit? Seriously? Oh. So where's my break even? My break even is 68. This is my break even right there. If we can hit this, I could get out for scratch on the day and just call it a day and be like, yo, I'm done with this shit. Oh, I could do that. 68. Maybe I should set up an alert to get, because we're almost, what if we bounce here? If we bounce right here, I might not even have that shot to get the break even shot, because we could literally just bounce right off of that. Well, I'm only I'm only halfway to that distance. Yeah, we're fuck. I really thought that the Qs would puke a little bit more because of how weak the Mag 7 was. And I thought at least at that test I'd be break even, but I'm not. Options are still trending down right now. I'm almost at my break even. This line is roughly the break even. Fuck. All right, I kind of need to watch the SPX to see what's going on here. Okay, that snapped. It snapped. Yeah, I still didn't even hit my break even. I'm a wee bit worried that there might be some sort of bounce out of this that I don't know if I have this stomach for it based on the fact that I already have a loss on the day. I'm a little bit worried. I really was hoping on that test. Did the Qs test? Okay, so the Qs haven't tested yet. Let me set an alert for that. Just did. Literally the Qs just did on that little flash. And the flash, wait, seriously? My break even? Oh, my break even point. Fuck me, dude. I misplayed that one. My break even was the low of the day. I probably should have just taken that because of this bounce out. And now the fact that I didn't take that trade, I'm basically hoping that there is a capitulation downward. Fuck, I misplayed that. I probably should have had my order. I didn't realize that my break even was exactly the low of the day. And usually, like, there's just such a strong chance of a reaction there that, yeah, maybe you're lucky and it keeps going. But, like, I have to now stomach a, like, 30-point bounce. All right. Minimum. All right. Do I want to do it? Fuck. I don't want to, but I know I should. I know I should. I know. I'm looking at this high, which is why my stop's there, and my entry is kind of in no man's land, but I'm just to take all risk off the table on this trade, to not dig myself into a deeper hole. I really am thinking about moving my stop just so, like, which it sucks because that could be so easily just wicked out, but to once again just not dig yourself further in. When you're in a hole, stop digging. I know I should do it. I'm going to do it. I just don't want to, obviously, but when you're in a hole, stop digging. One way to stop digging is to put your stop at break even. That's a good way to stop digging yourself into a deeper hole. And I don't like it because I'm frustrated with how this is all played out, but I know that's the right move. And I know you can't put yourself in a circumstance because, like, who knows? If it bounces up and it knocks me off, I'm going to be pissed off. But what if in the other situation, it does legitimately bounce and then I dig myself into a deeper hole, and now you're talking about, like, potentially opening yourself up for, like, going on tilt and trying to quickly revenge trade. So once again, the odds of me getting knocked out are high, but I'm also giving myself that fighting chance that, hey, let's go. I really need this to get snapped. 68 is my break even, roughly right here. All right, so above it, I'm net red. Below it, I am net green. And this isn't really my profit. Like, it is a profit target, but I just arbitrarily have it in there as an order canceled order. So if there's a weird flush, I get some money. But more likely than not, when I get out of my position, it's because my stop is hit because I move my stop and follow the price action. So that's there. Just like for freak circumstances, like yesterday, I used it and I didn't even know it was hit, and the market exploded and it just got a fill. So it's just there to be there. Fuck. Dude, every single fucking time. Are we just really going to bounce out of this? Okay, come on. I'm just hoping that The market gods reward me for doing the right thing by moving my stop to break even. That is what, if I were cosplaying as a good trader, which I am not, but if I were to act as a good trader, that's what a good trader would do. When you're decently in your money, especially in a red circumstance, don't let yourself go deeper. Don't let yourself go, fuck, dude, this is coming for me. Again, dude, how many times am I going to get just fucking wicked out today? I guess it just is what it is. Today has not been my day. Come on. It's really just battling it out at 600. It doesn't want to hold it or not. Does it want to hold it or not? We're playing the limbo game. Are we above or are we below? How low can we go? How low can we go? Okay. Let's start taking out these lows. Never mind. Just fucking rip it against me. Son of a bit. Like, it's just, look at these ranges are so disgusting. If you don't have a buffer in your account, it's so incredibly difficult.
Order canceled.
Fuck me, dude. Like, it's just, I mean, you could do the right thing like I did, like putting on protection. So, okay, I protected the move and I gave myself that chance of if it falls. But it's just, dude, it's just so, we're just getting no nice trend. Look at it. We made a low, but just barely. It's just like wicked below it. And generally, you could use a recent high as risk, but like these recent highs, even in the smallest time frame, it's so large. It's just so incredibly large that you're taking on, or at least based on my buffer size, I'm taking on more risk than the account can handle. So I can't trade that way. I can't use like, oh, okay, like really this breakdown trade in a normal day when the VIX isn't at 40, when it's closer to like 17, I would literally just be using this 1042 high. But right now, that's such far range away that if I use that, my account would blow out. So literally circa 1 month ago, when volatility was at a normal level, yeah, like maybe on this breakdown, you get short in here, you're risking that high, and you give it some room to breathe. You give like the trade a chance to work out. But in this environment, like you're getting into maybe the same entry, but you have to use such an incredibly close risk, because even like a little adverse 3-minute movement against you could be thousands of dollars, like thousands of dollars. So that's one of the brutal things about this environment, which is why I keep saying, oh, I got to build up my buffer. Because even if the market pukes from here, I got out. This is another 30 points. I'd be $600 in the hole by just waiting here. And that's what we've done in 1 minute. So you have to just be like absurdly protective of what's going on. Literally where I got out, my break-even trade, kind of just we're bouncing here. I would be, well, and waiting another minute, I might almost be back to break even. But like from here, from 9:50 or 10:55 to 11, that 5 minutes, this was worth $2,000. That movement right there, that small movement in five minutes was worth $2,000. And that shows you that, okay, if you're on the right side of it, you're net positive. If you're on the wrong side of it, you're $2,000 left in the hole. And do you have enough of a buffer to be able to handle those types of swings? So right now with these ranges, I have to be like way more on top of what my risk point is than I would normally be. Because generally in a low vol environment, yeah, maybe I took that short. I'd probably be risking the high at 1042, but generally that would be 30 points away, 40 points away. It wouldn't be hundreds of points away. So you have to just be aware of the environment that you're in and what's being, fuck, man. Maybe that would have, should we have, is this a double bottom? Are we getting the W? Double bottom, double. I mean, I'm seeing NVIDIA hold higher, Tesla hold higher, however. Yeah, all, like out of nowhere, I try to play that and then boop, options. Like I'm getting into trades and I hold it for a minute or two, and then the options a couple minutes after that just completely goose me. We have Mag 7 Delta making a low but trying to bounce out of it, and then the SPY is actually making a Delta high. So we're in such a weird circumstance. And even this, okay, are we about to break out of 300, or is this just a retest and we puke and we come back down? It's anyone's game. anyone's game. Is there might be an opportunity here. Yeah, dude, that might have just been the little fake out, make a fresh low, dance around. Is it going to break? Is it going to bounce? And then boom, a couple minutes, we get some options flow and we skyrocket back up to this level. Jesus, this whipsaw is fucking something else. This whipsaw is something else. All right, we're about to take out the last 10-minute, dude, yeah. It's okay, so right now, that's a good example of, Matt, why did you get out? Because I got out at break even at 18. It's now at 75. I would have been a good $1,000 deeper in the hole if I wasn't that protective. And even the crazy thing is this could puke all the way back down. But like the question is, can you white knuckle it through that? It's a tough thing to do with the size of ranges and the levered nature of the futures market. It's like literally I would be down another grand. Instead of being down net a grand, I'd be down net $2,000. And that just shows you that, yeah, if you're on the right side of it, you can make a lot of money quickly. But to be fair, if you're on the wrong side of it, if it goes wrong, it could go down really quickly, which is why, especially today, but ideally if I'm trading well over the past couple of days, I'm aggressively moving it. And you even see that internal battle with me. I was like, oh, I don't want to do this. I don't want to do this. But you have to kind of make yourself do the things that you know are the right things to be done. Because had I not done it, and I was like, oh, I'll put it up here. Like there's a good chance this is about to get taken out. And then I'd be down another $1,600. So I'd be down 2.6K. So you saw it, my original stop. And I was like, dude, I don't want to move it. And that's why you have to get yourself to do it. That's exactly why you have to get yourself to do it. Are we going to hold this? We're at another battle. All right, the Mag 7 flow. It tried to pick up, going a little bit flat since 1108. Looking at the S&P 500, we got dude, the SPY is telling us such a different story than the Mag 7. I think that's part of the reason why we're getting such choppy action is because the Mag 7 is bearish while the SPY is actually trying to show bullishness. It's just two completely different stories. Potential double bottom, but still lower highs and lower lows. So potential double bottom. But remember, there's still a 62% chance that at some point today we hit 533.50. It's just, can you take advantage of that with low risk? Low risk is the name of the game. Hey, my cat. What's up, Piper? Okay, well, I'm not seeing anything. I was holding on for a sec. Is this another opportunity to short? I mean, nothing's agreeing right now. Nothing's agreeing. We got this dip. I mean, you could either go short right here and risk the recent high, or if we bounce out of it, you could go long and risk the recent low. That's it. I have no dog in the fight, obviously, and I think both. It's easy to play Monday morning quarterback here based on how it goes. But the point is you don't know the next bar. You don't if you were to trade this right now, you could fairly say, nope, I'm playing the bounce and I'm risking one of these recent lows, or I'm playing it short, going with the current intraday trend and I'm risking this recent high. Both of those are very fair. Congrats. You just don't know. You just don't know the next bar. The next bar could be a nothing bar. It could be a huge red bar. It could be a huge green bar. And then it feels like trading is kind of that game of whichever way it goes, everyone's like, well, duh, it was evident. Obviously it was going to go that way, when in real time it's a completely different story, where at most moments in time, depending on the time frame you're on, you could argue either bullish or bearish and contort the argument either way and be right. Easy to do it. Easy to do it. Oh, how's the flow looking? I just keep coming back to the flow. I want to see how strong either the bets are or aren't. Flow's looking a little weak on this potential little break right here. If I do it, it's a 60-point risk. If I take that short, it's a 60-point risk. Do I really want to do a 60-point risk? That would more than double up my loss on the day. Am I accepting of this? Yeah, we came right back up to this key level, started to fail. The question is it going to be a higher low out of here and bounce? Here's a look at the flow in real time. Mag 7 bounce looking as if it's going to fail. S&P 500, surprise, surprise, holding steady. Oh, actually, no, there was some craziness right there for a second. What the hell just happened? Someone just slapped the SPY. Someone just slapped it. Someone slapped it. Are we going to get going? Oh, brother, 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 oh, brother. Oh, brother, oh, brother. We are below VWAP, which would generically make me favor. Generically make me favor the bears. Really drilled it on the 100 tick there. Is this going to go? Every single time it looks like it's about to do something, the very next bar makes it look like it's doing the exact opposite. The exact opposite. Oh, man. Makes you wonder. Makes you wonder what the hell we are doing.
Order submitted.
I don't know, Tonto. I don't know, team. I have no idea what I'm doing. I feel like a drunken monkey who was given the Kohrs to a key, and we're just trying to figure it out, you know? Anyone else just generically feel like that on any given day? Just a drunken monkey? We're just going to see how this one goes. If I held through that entire pain, I could have been fine. Obviously, I would be at break even on the account, but that's quite a bit of pain to hold through. Like generally I try to give this stuff a little bit more room to breathe. Obviously, at first I had my risk over there, and then I aggressively moved it. And if I didn't, I would have never been knocked out, and I would be net green on the day. I'm of the opinion that in this type of an environment with such incredible ranges, with such high vol, that I can't trade like that, because one misstep and you lose your account. So it's unfortunate, because I would literally be net green right now, and instead I'm still just fighting. But like I said, you can't think about it that way, because you could always play the Monday morning quarterback. Oh, if I just held, it would have been fine. Yeah. But what if you keep doing that and eventually you find your bad beat and your accounts are gone? Trust me, as a person who kind of traded that way, and I traded for months and months and months, like one misstep one day, like it could just end it all. And then all that effort you put into it, you just get blown the hell out. And it just is what it is. It is what it is. Tilting. I find it so funny when people say tilting, where I feel like I'm actually like abnormally in control relative to who I am and like how you guys have seen me in the past. If anything, you could argue I've been almost like the opposite of tilting. Is like I'm like really sticking to my risk and like really keeping it in control. I think almost to a degree that if I gave it a little bit more leeway, it would have been a bit better. I feel like it's actually the opposite of what's going on. The opposite. So my break even is right there. Oops, why did that not draw? Somewhere right. This, roughly, that would be my break-even line. Very, very rough. Very, very rough. Should I just move my I almost, once again, talking about aggressive stop movement, maybe I just move it to the top of this little shelf right here and just say, hey, because if I'm wrong, it would shave $200 off. So I wouldn't even be at a $900,000 loss anymore. It would just be 800. I could just move it to there. And once again, super high odds of getting knocked out. But if you can catch it, which apparently I've not been able to catch a trend today, but if you can catch it, you're just taking on no risk. Like, it just, I kind of want to. I kind of want to. Come on, break this. Break it. Break it, break it, break it, break it, break it. Break it, break it, break it, break it. Break it, break it. Break it. I'm looking for it to snap. What is this? 37. We're at 50. Come on, snap 37. Just snap it. Snap it real quick. Snap it real quick. Stop, list, kill a B. Got to be confident and give more cushion. I don't think you understand the leverage aspect of futures. If you give it more cushion and you're wrong on one trade in this environment, you could blow out your accounts. That's just how I mean, little movements. I'm moving hundreds of dollars, if not thousands of dollars. Unless you have a giant buffer, you are not afforded that opportunity. Truly, you like thousands and thousands of dollars could be going out the window, even on good trades. So if you give it the buffer that you're like used to in terms of like, oh, these recent highs and recent lows, 2 or 3 bad trades, you could blow out a 10K buffer just like that. Just like that. Come on. We got a little flash low there. A new low's at 32. I'm really thinking about moving my stop all the way down here. But I'm wondering if we're going to snap. This line where my cursor's at, that's just for me to know that roughly my break-even line. As in, it's there and I'll be tempted to get the fuck out and end today's pain if we hit that level. Come on. I just want to see that. Come on. Go, go, go. Go, go, go. We almost got to my break even. Almost got to my break even. We were flirting for a second there. Flirting for a second. Roughly 24. Right where my cursor is. We just need to push this fresh low a little bit. Right there. All right. Just got to my... Oh, almost. Pretty much close enough. So I'm moving my stop, guess what, to break even. So at this point, once again, I'm in a hole. And when you're in a hole, well, one of the biggest tips is to stop fucking digging. So now that we punctured that level, that is, I guess, just important to me psychologically. I move my stop to break even. And I'm hoping that I don't get clipped for the 10th time today. But when you trade the way I do, when you're aggressive with your stop loss, it happens more often than not. Like on these accounts, my most common trade is a break-even trade. It is. It just, because like when you're aggressive with it, that means you're moving your stop to break-in very early, and you're basically saying, hey, you're not even going to push against me a little bit. It's just going to keep going in my favor, and the market just isn't normal. Like it doesn't really work like that. So my most common trade, especially in this environment, is a break-even trade, because I'm like just so like I know that if it goes against me, it could be so much money, which gets me to quickly move my stop to break even. But hey, can he pull it off? Can he pull a magic rabbit out of his ass? Can he do it? Can he do it? Hopefully there's not a bounce at 500. Just need a little bit of a flush. 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 Come on. No. No. Come on. Just one baby flush below this just to hit me, and then I don't even care what happens. I'll shut it down. We'll shut the old system down. Stop it. Stop it. Stop it. Go. Go. Yes. Yes. Go. 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 Come on. Come on, get rejected at 500. No, wrong way. Get rejected at 500. Shit. Shit. Back below 500. I'll feel way better if we hang out below 500. Way, way better. Come on. Matt's gambling. What do you think trading is? Do you think that's some sort of like profound statement? Any form. Life is gambling, dude. The fuck do you mean? Matt's gambling. Wow, no one's ever realized that before. No one's ever pointed that out when you're talking about actively trading the futures market before. Come on. Finding a bit of support at 500. I'm just concerned about the size of the bounce out of it. As in, if it's big enough to knock my stop out. What a profound statement we have from chat. Matt's gambling. No shit. No shit, dude. Everyone, pause it for a second. Sherlock is in the audience. Detective Sherlock Holmes has cracked the case. All right, here we go. Here we go. Come on. Shit. Fuck again. Dude, these movements are ridiculous. We just bounced 30 points like it was nothing. Like within one 100 tick bar. Fuck me, dude. This is... That's just crazy. Just so big. Like, this is like right now with these ranges, it's so unforgiving. One little misstep and it's just game over. I cannot believe it just went from 78 to 22 in like just such a simple bounce. A 40 point, $1,000 implication in just ripped. Come on. Do the opposite to win. Rocket, I think you're a little stupid. You can tell that I'm net positive, right? If you did the opposite of me today, you'd be net negative. Like, you understand that, right? I love these people who say do the opposite to win, which literally if you did the opposite, you'd be losing money. And it's there. Like, you guys have seen literally every single trade live. Like, none of it was hitting. It wasn't Monday morning quarterback. And, like, you would actually be literally net down if you did the opposite. You need your magnet. I'm about to break out the magnet. We're getting to that point in the day where I'm running out of patience. We're getting to that point in the day. Another fucking bounce. No way. We're just getting such insane fucking bounces here, man. Come on. All you have to do is just go a little, like, I'm not even asking for something insane. I'm asking for an 8-point movement below the intraday low. not like, I feel like it's not even that big of an ask. I like truly think that this is something that the market gods can appease. Here we go. This has been a battle today, but are we in the final stage? Are we in the final stage? How close did we get that time? We got to 73.50 and my order's at 70. Come on, just give me a fill. There we go. Come on, just push it a little bit more. Push it a little bit more. Dude, we've been fighting. We're in the trenches. No. How close did that get? No. Dude, order sitting at 70. It comes to 71.50. Just fill it. Just end this. End this misery. Finally.
Order canceled.
Dingity, ding, ding, ding. 20K locked in. It was a battle. I'm not going to lie. I'm bruised. I'm beat up. I'm bloody. But I don't even know. We've worked now for about 2 hours, 9:30 to 11:30. Nice 20K locked in. Bada bing, bada boom. Obviously, I'm done. I mean, the way that today's been such an incredible battle, no, I'm shutting it down. Orders, let me just make sure, cancel all orders. I'm not pushing my luck today, folks. This is not the day for old Mateo to be pushing his luck. I'm just killing all the orders. I'm making sure I'm good. Okay. That's it. The numbers you see right here are the numbers that are going to be tweeted out later today because I'm done. Finito. Finished. Donezo. Donezo. I am. Do you do the full request at 260? No. If you're interested in trading with someone else's money here, right now the best offer is take profit. I'll pin it to the top of chat and I'll put it in the description of the video. But the way you do it is each one has like their own like specific rules on when you could request out and whatnot. So you're gonna have to look into it. But something like take profit, you could take out money your first day. So use that code Goonie. You have to put it in the coupon section when you're purchasing the account. You get 30% off for life and you never pay an activation fee. So basically you take an eval, where you pass an eval, you pass a test. You have to hit a certain profit without having a certain drawdown. That's how you pass the test. When you pass the test, you go from eval to performance. When you're trading on a performance account, you then are trading for real money. And if you do well, specifically on take profit, you could take out money as early as the first day. Other firms have different rules, but right now the reason I'm talking about take profit is because it is financially the best offering for all new people. So if you want to trade with someone else's money and minimize your own risk, your risk is literally capped at what you put on your credit card bill. So how many ever tests you take, that is your max risk. You'll never lose more than that. And then if you trade well, you could get payouts. So right now, if you're interested in sim-to-funded trading, as in trading with someone else's money, take profit's the best deal. As of now, this does change seemingly every day, every week for sure. 30% off for life and never pay an activation fee. Use that code Goonie pinned to the top of chat in the description of the video. And then when you have to look at the rules and the tests and all that, and different firms do it a little bit differently. So obviously check out the different ones. I use Apex, I use Take Profit Trader, and I use Vanquish. Those are the three I use. They're the best for my trading style, but obviously I implore you to use the ones that increase the odds for you being most successful. The ones right here, Apex has different payout request rules than Take Profit Trader. So for me, as of today, this is my eighth day trading on Apex, which means that I could request out money tonight. I'm going to do it, but they're going to deny it. They're going to deny it because yesterday I broke one of the trading rules. And when you break the trading rules, the rule I broke, you don't lose your account. They just make you trade for another 8 days before you could request. But once again, that's specific to Apex. And if you're looking at Take Profit Trader, they would have a different set of rules. So just to clarify, so right there, locking in about 20K. I'll do the request tonight. It's going to get denied. Then I'm going to have to trade another 8 days. And then I can request out 40K, 2K from all 20 accounts, 2 times 20. That's the $40,000, which once again, that is a like uniquely different than take profit, where instead of passing in one day like you can on Apex, you have to pass in 5 days, but then after that you could get payouts on your very first day. So like I said, there's slight differences, and generally the one I talk about on any given day with you is the one that is the cheapest one for you guys to get involved with at that moment in time. And right now take profit is the cheapest one. So on all these, take profit, Vanquish, on Apex, on Tradeify, on any of them, if you use the code Goonie, you're going to get a discount, and you're going to get the best discount that is live at that moment in time. And now the market's like legit taking a hit here. Jesus. All right, well, that's it. We've gone over by a good 34 minutes. Obviously, I'll be posting an update video this evening, and then we're going to be streaming once again tomorrow morning. Remember, tomorrow officially starts earnings season, and then on top of that, we're also getting the PPI, the Producer Price Index Inflation Report. So inflation report, start of earnings season. It's also just the conclusion of a pretty crazy week, so you never know what's going on. But right now, we are just being presented with a lot of volatility, which is a lot of opportunity if you're on the right side of it. But as you guys painfully saw throughout my day today, you just got to keep things stable. You got to ensure that you're not putting yourself in the situation where if it does go wrong, if it does go awry, that you're blowing out. And the best way I know to do that is just to be very, very aggressive with your stop. And what I personally like to do is moving my stop to break even as soon as it goes a little bit in my favor. When you trade that style, you're going to get stopped out quite a bit. So you have to be psychologically prepared for it. But it is a very good way to protect yourself, as you guys saw throughout my active trades today. That's what I have for you. I appreciate all the good vibes. I'll be catching you later in the update video. And if I don't see you there, I'll catch you in the stream tomorrow morning. And I'm going to hang out in the Discord. So if you want to join the Discord, I'll be there. But that's what I have for you. I appreciate all the good vibes. Peace. Have a good one.